India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy, and with me are Nigel and Surbhi. Guys, interesting last 2 weeks in the market. Back after a while, but good to see that the markets are back on their feet.
Welcome back, Sonia.
Welcome back.
It's really been hectic, right, for the markets, but good to see that they've bounced back, and how.
Well, that's right, and a fair bit of action, Sonia, is what you missed, but the market's a little bit higher from where you left. I think when you left, it would be a little south of 23,000. Yeah. We're holding around 23,500. So let's see how it goes from here.
And we've navigated an election, what was looking like an upset, but maybe not so much of an upset. The Fed policy. So a lot has happened. And, it's not just in India. US markets also hitting those record highs. So, yeah, it's bulls charging ahead across global equity streets.
So as they say, right, if you don't look at the markets for a month or two, it's actually a good thing because you escape all the volatility and finally you're back where you started. So not such a bad thing, I guess. But lots of cues to, take forward this morning. So let's get straight to it. First up, of course, the markets continue to be at record highs. So that's always a good thing, good for the bulls. The Nifty is actually up 4% in the last 2 weeks, and this is the biggest two-week gain that we've seen since December of 2023. Both FIIs and DIIs bought in the cash markets, so, a lot of big events to watch out for. But if you look at the numbers, right, FIIs bought about 2170 crores in the cash markets on Friday. DIIs bought about 650 odd crores, so the money continues to come in thick and fast. The next big events for the market, one is, of course, the union budget, and the second is Q1 earnings, and sources have told CNBC-TV18 that the budget presentation may happen on the 22nd of July. So that is the big date to watch out for. Ahead of that, of course, Qs are a bit on the lighter side, so maybe the markets could just see some bit of consolidation with a positive bias, as the GIFT Nifty is suggesting today. But global markets continue to be very strong. The S&P 500 continues to hit record highs. In fact, overnight as well, the Dow was up about 190 odd points. The Nasdaq had a very strong run last week. It was up almost about 3.5%. Nvidia has hit an all-time high as well. Apple jumped nearly 2%. So that clearly is the space to be. But let's see, it's a truncated week. We have just 4 trading sessions and the market has bounced back in a big way. So perhaps we can continue to hold on to our highs of last week and maybe chug along till the next big event.
Well, absolutely. Take everything that you say, Sonia. It's just that before I even get to my chat, I want to start with the one big cue, and that's the only worrying factor as I see all the markets around us, and that's oil prices. Yes. Look at what's going on. NYMEX, by the way, has touched 80. We don't talk about that contract because Brent is more relevant to us looking at the Indian crude basket, but NYMEX is at 80, WTI crude, and Brent is now inching towards 85, and this is building on a 4% rally that the oil markets had last week. And again, we've got sort of, fresh impetus on overnight action as far as oil prices is concerned. So watch for this. This is the one big negative. Otherwise, it's been blue sky territory, really, for markets here at home and for Wall Street as well. And we had more of that. The market was very buoyant on Friday. Indices managed another record closing even yesterday. The S&P, of course, and the Nasdaq have been leading the charge. But even the Dow joined in the party yesterday, so that was good news. On bonds, US bond yields are getting extremely volatile. So we saw a very quick and snappy drop all the way to 4.2. And now there's a bit of a reversal coming in. And that's because of some commentary that's coming in from Fed officials. We had the Minneapolis Fed president, Neil Kashkari, speaking. And the indication that he gave was that the Fed may cut only once this year in calendar year 2024, and that cut also might happen only by December. So that, by some analysts, was seen as a bit of a hawkish comment because it's pushing back those rate cut expectations even further down the year, and therefore bond yields started rising. There was a 7-8 basis points rise, depending on which paper you're looking at in the US. So watch for that. There's going to be retail sales data, retail sales data that comes in trace. That's in focus. For us here in a row, it has been a green ride. 3 consecutive days of hitting fresh highs, and the latest number got us all the way closer to 23,500. In fact, it's been a pretty good month so far. So let's pull up the tally. In June so far, the Nifty is up about 4.2%. the broader markets. That's where the story is, right? Mid-cap index is up almost 7%, small-cap index up 8%. Look at the bank nifty. The question that I have today is this index going to start playing a bit of a catch-up? It's up only about 2%. It did manage a close above 50,000 on Friday, so that was one milestone that got taken out. And it's, as I said, just about 2.5% away from the all-time highs. By the way, speaking of banks, SBI did something interesting. It hiked its MCLR by 10 basis points, which means all the loans linked to MCLR will also go higher. So we'll watch out for some of the bank stocks and SBI in particular. Auto stocks, of course, continue to be in focus because we have a mega IPO coming. Hyundai has finally filed its DRHP, and this could be a massive $3 billion IPO. So auto stocks on Friday were extremely revved up. Let's see if we get more of that. And last but not the least, want to leave this on your radar as well. The Prime Minister is in UP and Bihar over the next 2 days. And there's a lot of, rural focus events that have been lined up, including the Kisan Samman Sammelan, where he'll be releasing 20,000 crores of the next tranche of the PM Kisan Yojana. And why am I watching for this? Because, guys, you remember, Nigel, you'd remember this. It was all about noting whether the government's commentary and its policy action will tilt a little more towards the rural side.
Yeah.
Let's see what kind of posturing we get, what kind of headlines we get. But it could be important from the consumption stocks point of view as well.
All right. Well, in terms of the 23,500, that's been a level that we've not been able to decisively conquer on a closing basis. But the good point was on Friday's trading session, we went around that mark. And in fact, we came off only around 25 points from that peak. On a day-to-day basis, otherwise we were coming off close to around 100 points odd. So we went closer to that mark and we came up with 25 points by the time we did wind up. What did the FIs do? Well, they added close to around 11,000 contracts. So long addition is what we saw. And because of this kind of long addition and the short covering that we've seen, well, the short positions, in percentage terms, they've come down from around 87%. Now they've come down to around 53% odd. So bulk of that short covering that we were talking about, that's taken place. How are the FIs positioned? Well, they continue to remain net short, but mildly so, only 25,000 contracts on the short side. And corresponding to that, you have the client positioning. That's at a net long position of around 25,000 contracts. So those two are balancing out each other. Remember, at the peak, you had FI net shorts at 3 lakh contracts and the client net long at more than 3 lakh contracts. So, you've seen some unwinding of longs from the clients and you've seen some covering from the FIs on the short side as well. What about the India VIX? We have made this point earlier that will it be a repeat of 2019? And it appears so because, the VIX spiked up. It went all the way to around 30 odd. And from there, it's halved. In fact, it's the lowest level we have seen all the way since late April 2024 as well. So the VIX is cooling off. That's normally a bullish indicator. What about the PCR? The PCR, well, that's moved up to a little bit higher. Remember, a few sessions ago, it was only at around 1. Now it's at around 1.3 because the put action has been far more. Even in Friday's trading session, the 23,300 put, well, that added close to around 20 lakh shares. While on the call side, the 23,500 call, well, that's seeing a fair bit of addition. And just plugging in these numbers with the premium, you get the levels that you're looking at. Near-term resistance will be at around 23,600 odd. That's going to be the resistance level. Support comes in at around 23,200. Even last week, we went closer to this level. And from there, we did see a bounce. Final hour of trade, we'll be looking out for the Nifty Financial Services Index because that plays out the weekly expiry. The stock that I'm looking at in the cash market, well, it's Gujarat Industries Power Limited. They have been, talking about increasing a capacity over there. So that's one stock that we'll be looking at. And the focus is going to be on the renewable side of things. So execution will be tracked from here. But the stock went ahead and it made a fresh 52-week high in Friday's trading session. And for the last few sessions, delivery has been massive. On a day-to-day basis, we have been seeing that the average delivery in the month of June is close to around 10 lakh shares. That compares with around 2 lakh shares. So clearly, some parts of the street believes that execution is going to happen from here on, though I'll just keep an eye out on the debt book. But otherwise, you keep an eye out on this one. It conquered the 20 DMA and made a fresh 52-week high.
Okay, very helpful there. Thanks a lot, Nigel, for that. So we'll watch out for all of these stocks and more. But very quickly, let's kickstart the show with some opinion coming through to you. First up, we have commentary coming in from Sanjeev Prasad of Kotak Institutional Equities, who says, in their view, the upcoming state elections may see state governments turning more populist, even as the central government broadly sticks with its current agenda. He says BJP is currently the incumbent in many such states and the results of the Lok Sabha elections may force a number of state governments to turn more populist. Meanwhile, he adds opposition parties are likely to be further emboldened by these results and continue to up their populist ante. However, he notes that the central government has enough fiscal space to pursue more aggressive capex, a moderate increase in revenue expenditure and fiscal consolidation, and the government can also look to increase its divestment target given the excitement around PSU stocks.
Okay, that's a view from Kotak Institutional Equities. Upasana Chachra of Morgan Stanley says, unlike most central banks in Asia, they do not expect the RBI to cut rates. She says growth is strong and inflation, while moderating, is still above target. Moreover, she thinks the RBI will see the need to keep real rates somewhat high to ward off potential financial stability risks.
Okay, let's also tell you what's happening in the money markets. Abhishek Goenka of India FX and Asset Management says the dollar has strengthened overall and the dollar INR is back in the familiar 83.50 to 83.55 territory, where it is likely encountering intervention from the central bank. He says weakness in the yuan is also weighing on the rupee. He adds implied volatility, however, continues to remain extremely suppressed, and he expects the rupee to trade in a range of 82.70 to 83.70 over the medium term.
On bonds, Vishal Goenka of IndiaBonds.com says the market will open after a long weekend and see resistance levels for bond yields. At this level, he says US Fed officials continue to underplay timing and number of rate cuts for this year to a maximum of one for 2024. He says oil continued its rally with Brent above $84 a barrel again, and US dollar strengthened as well. He says significant geopolitical upcoming events in Europe with France and UK elections will keep global markets tentative. He's expecting the 10-year benchmark bond yield to trade in a range of 6.97 to 7.02%.
Well, we've got a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, we'll run you through the list. We're looking at Mahindra, Bharti Airtel, Interglobe Aviation, Hindustan Aeronautics, Gujarat Power, Godavari Power and Ispat. You have Jubilant Pharmova, as well as BLS E-Services. All of them will be reacting to positive news flow. On the flip side, IFL Finance, Biocon, Sterlite Tech will be stocks that will be reacting to negative news flow.
Okay, so all of those stocks, more details on them coming up in just a bit. But first, let's take stock of the global market setup. We have Daniel DiMartino Booth, CEO and Chief Strategist at QI Research with us. Daniel, great to have you with us on the show this morning. So, markets around the world, at least on Wall Street and here in India, have been feeling very good on the equity side, even though those expectations of rate cuts from the Federal Reserve are getting pushed back. Do you see this Goldilocks run on the equity side continuing?
Well, traditionally speaking, until the Federal Reserve actually sees the whites of the eyes of their first rate cut, stocks do continue to rally. And I think that that's one of the reasons that we've seen the follow through that we have, even though we've seen a distinct weakening in the macroeconomic data. If the Fed is going to choose to look past the data and continue to stipulate that it's not going to be lowering rates until December, mid-December, then I think stocks are going to continue to have room to run. Again, it's not until there's a recognition that recession is imminent, and that comes when the Fed does indeed lower interest rates for the first time. It may be counterintuitive, but it is the way that it's worked historically.
So, Daniel, hi, good morning, and thank you for taking the time out. So far, the US markets have been very strong. The Indian markets are also sitting at record highs. Do you get a sense that this is something that can continue? And for someone who's watching from the outside, does it still make sense to invest in emerging markets over developed markets for the rest of this calendar year?
Well, I think that that's a very tricky question here because at this point, other central banks have already started to lower their interest rates. They've already started to ease policy. The chances are that the dollar is going to maintain its strength here and that this is going to pull money away from emerging markets, at least in my view, going forward. So again, I think that as a factor of time, as we get closer and closer to the end of 2024, and especially closer to U.S. presidential elections, that the Fed is going to have more control of the narrative than it otherwise would.
Hi, Danielle. Good morning and good to see you. And, from the emerging market basket, though, where does India fit in? Because we have been a rank outperformer from the emerging markets. The problem is valuations, trading at northward of 20 times, while we have a peer like China that's trading at around 11 times. So where does India fit in your emerging market picks?
So I think India is almost a victim of the enthusiasm and optimism that bleeds into India by way of pessimism surrounding China. Of course, China has seen some bump in its data, but that really has more to do with the fact that they're exporting more than they should be otherwise to offset weakness in their domestic economy. I can tell you that from the perspective, again, as an outsider looking in, India has been for many years so hot from the perspective of Western investors that it is always going to be the go-to. In addition to, ironically, here I am in Texas, in the south of the United States, in addition to Mexico also being perceived as being a sort of safe haven among the emerging markets, because these are the supply chain ties that will bind going forward. And that's something that is accepted as a narrative looking out 5 to 10 years into the future. We see India, we see Mexico as being, again, relative safe havens within the emerging markets complex.
Sure. Daniel, the thing is that while we hear that from exactly the point that you made from a lot of foreign investors, the money is yet to show up this year because this rally, this market's been driven entirely by domestic money. So what are the conversations you hear around you? Is it that people are still more comfortable if NVIDIA is still giving you the kind of return that it is? Why look for emerging markets? Why look for in India? Is that the thought process? What do you hear around? Because the home market rally is still going so strong.
Well, that may be the case, but at least from my perspective, I tend to not run with the consensus. So I'll put that out there as a disclaimer. We are seeing a distinct weakening in the job market. We have a major revision coming to our payroll statistics in August. And there are a lot of people who are in my camp right now who believe that the Fed is in the process of committing a policy error and that they will, in fact, be forced to lower interest rates by the time the September Federal Open Market Committee comes around. In other words, that there's going to be a swifter shift in what the Fed is forced to do to acknowledge the weakness in the underlying U.S. economy. We have retail sales coming up tomorrow morning. We know that Americans have stopped charging on their credit cards for the first time in 3 years. The evidence is multiplying that the United States equity market rally is in its last throes, in its last hurrah, and that we're going to be seeing a real pullback here in the United States, which will force U.S. investors to look outside.
Well, that's a really interesting perspective, Daniel. Sonia, you heard that? The last hurrah, perhaps, says Daniel, for Wall Street.
Okay, I mean, that's interesting. But I want to come back to the point you made about emerging markets, right? You said that India and Mexico continue to be safe havens in the emerging market universe, but you also said that things may not be as strong as they have been in the recent past. So what does an emerging market investor, an investor watching you right now, what does he do for the rest of the year, he or she?
So I think the best thing that I think the best thing that all investors can do at this point is to understand the ripple effects of a true downturn in the United States and how that will be perceived and reacted to in other markets. If the United States catches a cold, it's a very, very old cliche, but it certainly continues to apply. And again, I would draw your attention to the fact that we've gotten through many elections, but that the one election that we're getting through that's going to be the most important and potentially the most contagious to the rest of the world is going to be that of the United States. I will go back again and say, I think that by the time the U.S. elections are upon us, that the Federal Reserve will be in a rate-cutting mode. You have to ask yourself, what are the repercussions of the United States market coming down in the event that people need to, as we saw last week in France, with its stock market coming down 9%. All of a sudden, by Friday of last week's trading, that was bleeding into our risky asset markets. I think people have to stop and look at the financial markets in a very holistic way, because sometimes when there is a rush for the exits, there is indiscriminate selling and plowing into what are perceived to be the most safe havens. That would be gold and U.S. Treasuries.
Okay, Daniel, we'll leave it at that. Thank you so much for joining us and speaking to us on CNBC-TV18. Appreciate your time here. Let's dip into a quick commercial break. On the other side, plenty of stocks to talk about. Our list of top 10 stocks with our entire research team coming up in just a bit. Stay tuned.
Welcome back. Well, it's time now to bring it down to stocks and tell you about the top 10 stock list to watch out for today. And our team is standing by with that list. So, guys, we have lots to cover. But, Sonia, let's start with M&M. You know, we had the time and fortune to sit with the top management. I guess they're sounding very bullish across their businesses.
They are sounding very bullish across businesses. So we're going with green on the stock this morning. Let me just put the key takeaways right on board. They had an investor meeting as well, an investor day. And if you look at the stock too, the stock is up almost 17% in the last 1 month. Now, they have pretty much reiterated what their stance was in the past. They said that they will capitalize on market leadership in both the farm and the auto segment. They're looking to unlock full potential in their IT and financial services space. They're looking to deliver high growth in some of their new ventures as well. And if you look at the core auto business as well, the SUV segment has grown by leaps and bounds. The market share has risen from 15% in FY21 to about 18% in FY24. They have showcased 3 new electric SUVs and they plan to launch 13 new SUVs and 3 facelifts over 2024 to 2030. So they are very, very bullish on this entire space. Now, brokerages are bullish as well. Jefferies has raised their target price on the stock to 35.10 from 29.10 earlier. And that's a big upside to the current market price on M&M. So I'm guessing the stock will be in the green today. Jefferies expects the auto volumes to rise at a 14% compounded growth rate over FY24 to 27, led by an 18% compounded growth rate for the SUV segment. And you folks had a chat with the management, so looking forward to hear that as well.
Well, that's right. We have that exclusive conversation with the top management of Mahindra & Mahindra from their Investor Day at 9:30 a.m. later today. So stay tuned to that. Okay, all right. But Sonia, you're tracking a couple of more stocks, including
Yes.
Airtel as well as Interglobe.
So 2 stocks that I'm looking at this morning. One is Bharti Airtel. There's some positive news flow there. The company has actually prepaid about 7,900 crores to the telecom department. This is to clear some of their deferred liabilities for the spectrum that was acquired way back in 2012 and 2015. So this prepayment of spectrum liabilities is high amount, almost 7,900 crores, and that's something that the street may take positively too. The other stock I'm looking at is Interglobe Aviation. Now, that one has been in the green for the last many days and weeks. The company continues to gain market share because of 2 reasons. One, huge improvement in domestic air travel growth and a capacity crunch because of certain problems that other airlines have faced like Vistara, etc. So if you look at the market share in the month of May, Indigo's market share has gone up to 61.6%. That's a 1% rise in the month of May. Continues to be the market leader. The second player is Air India with a market share of 13.7%. So it's almost like a monopoly that Indigo has at the moment. And that's why the stock has been gaining so much ground. It also added 5 lakh passengers month on month. So it carried about 85 lakh passengers. That's a 5 lakh up move compared to last month. So that's another positive. And Indigo will receive a compensation from Pratt & Whitney for the grounded aircraft issue. So that's another positive. So I'm going with green on that stock today.
Okay, fair enough. So we'll watch out for Interglobe Aviation. Let's move on and look at some more names. I think we've got Abhishek, who's tracking IIFL Finance. IIFL Finance numbers finally came in. Abhishek, how do they look?
Well, the numbers look to be weak, especially with respect to gold financing, and that was on expected line, but asset quality deteriorated, which was not expected. So, company has stated that RBI issue has been resolved. Their asset quality did deteriorate. Gross NPA ratio was at 2.32 versus 1.71% sequentially. The gold financing, over there, the gross NPA jumped up to 3.83% versus 1.16% sequentially. Calculation shows that the net interest margin might have expanded on a sequential basis, and that is to do with the fact that securitization and assigned AUM did help them in controlling the cost of funds. Disbursements are down 15.5% YOY and about 1.8% sequentially. AUM growth is strong at 22% YOY and about 2% sequentially. In this, the gold AUM has declined almost by 5.5% sequentially. The NI growth is at 28.5% YOY and about 2.5% sequentially. They have an exceptional gain of about 200 crore, which has helped them to report a PAT of 430 odd crores, which is down 5.9% YOY and about 21% sequentially. Back to you.
Thanks a lot for that, Abhishek. Well, let's hop across to Upasana. She's here to tell us about 2 more stocks, HAL as well as Godavari Power and Ispat. Upasana, morning.
Thanks so much for that. Good morning. First up, let me start with HAL. Defence Ministry issued RFP for procurement of 156 light combat helicopters. Next up is Godavari Power is packed. The board has approved buyback of 1.64% equity stake worth 301 crores via tender offer, and the buyback price is set at 1400 per share, which is at a 30% premium as compared to the Friday's closing. All in all, I expect both these stocks to open in green today.
Okay, very helpful there. Thanks a lot. Let's hop across to Sonal now. She's going to tell us about some stocks that are in the news this morning. Sonal, good morning.
Good morning, Sonia. Let me start with Biocon because the US FDA has concluded good manufacturing practice inspection at their API site, which is located in Visakhapatnam. 3 observations were cited. The company says they are addressing the same and they will reply to the US FDA soon. Jubilant Pharmova, 2 news pieces here. First, the subsidiary has announced an investment of $50 million to expand their pet radio pharmacy network. With this particular investment, they will be putting up 6 radio pharmacies in the US in different regions, and this could be operational by FY28. Additionally, one of the subsidiaries, they have prepaid a loan amounting to $75 million or around 626 crore rupees. So going with green on this stock. BLS E-Services, we spoke to the management on Friday itself and they did indicate they could go ahead for some acquisition, and now they've acquired 55% controlling stake in RD Fidelis Solutions Private Limited, which is one of the largest players in India for distribution and processing of loans. The enterprise value here is 71 crore rupees. It is an all-cash deal and the acquisition would be completed by Q2 of FY25. For Sterlite Tech, the European Commission Directorate General for Trade has levied provisional anti-dumping duty on optical cable fire cables from India. The duties range between 8.7 to 11.4%, and this could be negative for the company.
Okay, absolutely. We'll watch out for all of those stocks. Sonal, thank you for that. Let's recap the list of top stocks to look at today then. The ones that have positive news flow around them are M&M, Bharti Airtel, Interglobe Aviation, Hindustan Aeronautics, Godavari Power and Ispat, Jubilant Pharmova and BLS E-Services. Stocks with negative news flow around them are IIFL Finance, Biocon and Sterlite Tech.
Okay, well, the only concern for the market seems to be the way crude is moving. So let's hop across to Manisha Gupta now. She joins us for a roundup of all the action from the commodity markets overnight. Manisha, hi, good morning.
Morning, and thank you for that, Sonia. Well, yes, the crude oil prices now are trading at a 6-week high. We've seen 2% of gains overnight. So the WTI is trading above $80 and the Brent is now trading above $84 a barrel. There are 4 or 5 reasons for the surge in crude. One, the U.S. summer driving season demand is expected to be strong. Second is the U.S. hurricane season also has begun, and this year could be looking at 24 named storms. So the markets do anticipate that the next 3 or 4 months could be important in sense of weather to watch for the crude oil as well. Third is that the OPEC and allies have now reiterated that they will continue to stay with the output quota cuts. And the markets also have seen OPEC and IEA suggest that in the third and the fourth quarter, you could be looking at decline in global inventories. The U.S. oil rigs also have declined for a third straight week. They are now lowest since Jan 2022 and down 64 rigs than where we were last year. In the metal space, though, we have seen some profit-taking continuing. It's a 2-month lows for aluminum and copper right now. The weak China industrial output data for the month of May really seems to be weighing on.
Okay, all right, got that. Manisha, thanks very much indeed. Watching out for the rally in crude oil prices for sure. Let's take a break on that note. We'll come back on the other side and we'll have with us Siddharth Khemka of Motilal Oswal Financial Services. We'll look at some fundamental stock cues as well.
Welcome back. You're tuned into Bazaar Morning Call. Well, we've discussed a lot of stocks with you, but a couple of more will be in focus. Zomato as well as Paytm. Mangalam joins us to run us through the news piece on that. Mangalam, morning.
Good morning. So there was news piece that, there were news reports over the weekend that came in which suggested that Zomato may buy Paytm's entertainment business in a deal size of about 1,500 to 18 to 1,900 odd crores. And it is by virtue of the new SEBI rules that both these companies have informed the exchanges, saying that they are in talks for a potential deal for the sale of Paytm's entertainment business, though no binding agreement has been arrived at yet. Remember, this is a deal, if it does fructify, it will aid Zomato's going out business. Zomato's going out, which is dining in restaurants or going out business, in FY24 was close to around 258 crores in terms of revenue, and the company has been looking at increasing its growth potential in the non-delivery and non-Blinkit businesses, the likes of Hyperpure as well as going out. And Zomato last year started a music and food event called Zoma Land as well. So all these factors may perhaps improve their business. For Paytm itself, it would obviously take care of some of their non-core businesses, give them some sort of cash, and Paytm had acquired these businesses way back in 2018 for an undisclosed amount. Zomato, the cash on their books is close to around 12,251 crores. So if the deal does fructify at around 1,500 to 2,000 crores, as reports have suggested, it would not cause a big dent in their cash balance as well. So from a deal standpoint, this looks like a win-win for both. And that's exactly what bull markets do, right? Had this happened a couple of years ago, maybe the street wouldn't have liked Zomato's adventurism into non-core businesses. But the fact that their core businesses are now generating cash and growing well, a 1,250 crore acquisition or 1,500 crore acquisition in a cash balance of 12,500 crores would be appreciated by the street.
Absolutely, Mangalam, get that. And that could also explain the little bit of an excitement that we've seen on the Paytm stock. If you've noticed, from lows of around 350, 360, Paytm has moved up to 423. So the street definitely seems to be getting some wind of it. And by the way, those those guidelines that Mangalam spoke about, the SEBI guidelines, they were on market rumors. They kicked in from the 1st of June. So it's good that finally, because of those new market rumor guidelines, now we don't have to just sit and speculate. Yeah. At least we have some official statements from the company as well.
Okay, well, let's get Siddharth Khemka into the discussion now. He's head of retail research at Motilal Oswal Financial Services. Siddharth, hi, good morning. So many stocks to talk about, but I first want to start with Mahindra & Mahindra, because the management was very confident at the investor day and at the discussion that we had with them as well. Of course, the stock has done very well, but there's a big target price upgrade that's coming from Jefferies this morning. I wanted your thoughts. So for someone who's perhaps missed out on the rally in M&M, does it still make sense to buy it here?
Yeah, very good morning, Sonia. Glad to be on the show. So if you look at, I think the management sounded very confident on the overall business strategies. There has been strategic focus on capitalizing on the market leadership in its core automotive as well as the farm business, unlocking potential of some of its other large business, which is M&M Finance and Tech Mahindra, and also looking at some of its gems that they identified last year and taking it a 5x, five-fold growth over the next few years. I think overall, the focus on capital allocation has helped in the last few quarters and years, especially with the improvement in its core business. I think valuation-wise also, given the growth as well as the newer businesses, we believe that it only shows on to show that how M&M has kind of transformed in the last 3-4 years, especially on the prudent capital allocation practice, which had been one big ask from the investors community. So I think overall we still are positive, and there is still room for upside, given that they plan to launch new products in the auto business. EVs is another place where the penetration is going to happen. They intend to launch 7 new EV models that would also gain market share there. Valuation-wise, as I said, it trades at about 20-22 times, which is kind of comfortable and gives us some more room for upside. Currently, we have a buy with a target price of 3,300, but looking at the improvement in the farm equipment business, expected good monsoon, I think the momentum in M&M will continue.
Okay, all right. Hi, Sid, morning and good to see you in. I wanted to ask your view on HAL. The MOD has issued an RFP for procurement of 156 light compact helicopters. I think part of the street was waiting for this. The stock has, as it has, been a big outperformer, but your view on HAL at current levels?
Yeah, Nigel, good morning. So I think this is a structural story that will keep playing out. We'll keep getting these news flows with regards to the high order book that these companies will keep winning, be it on the domestic side from the MOD or the recent focus on the exports. So I think, yes, the stock has rallied in the past, you can say 1 or 2 years, and is trading at a very high premium valuation. But with this strong growth anticipated, and you have very few limited companies to play this defense space, which are so large in size, I think that premium would continue. See the kind of order that they have gone, a 50,000 crore order. There was no one else who bid for this tender. HL was the sole bidder, and they got the order. So I think this will only go on to strengthen their long-term positioning within the overall defense space.
Got it. Siddharth, let's go back and talk about what we were just discussing, which is this Paytm and Zomato deal. Actually, my question is more on Zomato. Dream rally for the stock, right? It's up 50% in 2024. It's up 150% if you look at the last 1 year. What do you think? Is there further headroom? Clearly, things have started improving, but the question is valuations and the runway, growth runway that you are factoring in. What are your thoughts?
Yeah, Surabhi. So I think definitely there is a lot of room and runway for growth in Zomato. These things have just started turning around. As Nigel and Mangalam were discussing some time back, the street would not have been that positive. But if you look at what happened when the acquisition of Blinkit happened, the street punished the stock. The stock from its IPO days had fallen, and from the bottoms only, the stock has risen back to now above its IPO price. So I think if you look at the talks for this discussion, it is only complementary to the existing offerings. If it goes by, it will be another positive for Zomato. We don't expect a strong cash outflow for this acquisition. It will only strengthen the offerings for its Zomato and its Zomato Gold membership, which will only strengthen. So I think growth-wise, pretty much strong growth. Improvement in your PAT margins, return ratios from single digit. We are expecting about early double digit return ratios by FY26. And earnings wise, from a low base, it will be a very strong earnings. So we still feel there is upside to the stock. Currently, we have a target price of 220. But I think with this news flows, and once that gets confirmed, further upside can be built into the stock.
220 for now. Got it. So noted that. So that's stay on. We'll have more questions for you. Just allow us some time to connect with our first management on the show today. Orient Pro Solutions is the company on the radar. Now, this is a stock that has surged 167% in the last 1 year. So it's been a top-notch performer. Now, the latest news is that the company has received the final authorization to operate as an online payment aggregator by the Reserve Bank of India. It aims to offer a wide range of services in the payment ecosystem globally, actually, not just in India. To talk about this, understand these prospects better, we have with us Ashish Rai, CEO of the company. Ashish, great to have you on, and congratulations on getting the final approval from the central bank. Now, just give us, the entire construct on this new business, payment aggregator. What are you hoping to achieve? What are the timelines, local, global, and some numbers as well, the scale up, and how much can this business contribute to your overall top line tally?
Thanks, Sobi. Good morning, and thank you for having us. Look, I think for us, we are a global products and platforms player. We've been present in the payment space across the spectrum, on the issuer side, on the transit side, etc., in a long way, right? So for us, it's where can we bring the strengths of Orient Pro in creating deep IP, in creating software together with the ability to sort of run payment transactions, right? So I think from going through this process with Reserve Bank of India and getting the approval, I think it's sort of a huge statement for us in terms of our capabilities in bringing everything together. I think what we've seen over time across all our businesses, I mean, there is a first order value creation, which is, usually running the transactions, and that allows you some level of value capture. But the real value capture happens when you get to the second order, where you bring software together and end-to-end platform activities together with the ability to run payment transactions. So transit is, for example, it's a great example, right? We've got one of the most integrated end-to-end transit payment stacks in the world. We're present from US, Latin America, Central America, Australia, India as well. We are a big major player. Can we bring, now we run it through our own gateways. The value creation is a lot more, right? So it's going to be a significant bet for us going out into the future.
So, Ashish, I mean, since you're saying obviously this is going to be step by step, and the first order benefits will probably be measured in the number of transacting users you can get online, right? So, share some targets with us and also timelines. By when will this be set up? And this is going to be open to, it's going to be a B2C platform, or is it a B2B platform? And how many users or how many transactions will you target in the first phase? Some timelines and some numbers.
Okay, so look, great question. So for us, I would not want to start throwing dollar numbers out here, because I think, look, overall, we will embed this inside. The initial use cases will be where we are already present and we sit this alongside us. So transit, for example, is several hundred crores over time in terms of the opportunity that we can target, right? And we will embed our gateways inside. That's the first use case. Your question about B2C and B2B is relevant, right? We will go where we are strong. So B2B would be a huge focus for us in terms of, can we, bring this together with our strengths around the B2B SaaS offerings, for example, that we have, right? So I think that again would be a huge driver. We will embed this inside most of our offerings that go out. Sure. So transit, B2B, supplier payments, I think that is going to be the focus. So in principle, approval was quite some time back, right? So we've been working at building this out. So we are nearly ready. We will be sort of out over the next few months as we roll these offerings out.
So Ashish, it's safe to say that this is factored into your long-term growth guidance of 30%, right?
Look, we've been growing at 35% for the last 4 years, right? We will organic. We have number of levers to drive the growth. This is built in. Of course, at some point in time, you start hitting, an inflection point where the growth, can be a bit of an hockey stick beyond where we are. But by and large, I'm not going to change my, guidance over this. We'll stick to the 30 to 35 that we've been guiding.
Okay, 30 to 35% growth guidance, you stick to that. Got it. Can you give us a sense of how the order book is shaping up overall? What are the growth levers for you? Where is the maximum amount of traction coming in from over the next 12 to 18 months?
Yeah, so Sonia, order book is very strong. So I think the last reported number we had was 1,000 crores plus, right at the end of last year, which is strong enough for us to power through the growth numbers that we planned for this year. The demand really for a lot of our offerings is something we've never seen, right? So these numbers will move. So for example, corporate banking transformation deals on the transaction banking side, on lending side, I mean, the pipeline is probably, even in India, is probably 4 times what it used to be. So we are trying to calibrate the growth. Demand is really very strong, but you want to grow at a measured pace because you're running for the long term, right? So order book is very strong. Pipeline is really something we haven't seen across transit, across banking, across even the data center spaces, right? And we are trying to calibrate the growth so that we can keep the delivery quality at the right level, right? So I think that is essentially where the business is.
All right. Hi, Ashish. Good morning and good to see you, Ben. Ashish, one part of this rally, that we have seen is you being the CEO, you have close to around 6.5–7% stake in the company. So besides having the plans for the company, being a shareholder as well, what do you think about the stock price? It's moved up so drastically. What kind of message will you give to your shareholders?
Yeah, so look, Nigel, like Buffett says, right? I mean, price is what you pay, value is what you get. I think ultimately it's a question of what levers does the management team have to drive the value. Revenue growth is one of those things, right? We've been growing at 35%. I think probably one of the very, very few Asian or Indian tech players, real tech players, right, not services, who actually been growing at 35%, sort of really like clockwork every year. Second, we've been running 21–22% EBITDAs, which sort of puts you in the top few in terms of profitability in the space. But the most important thing about Aurionpro is the IP. We've been building out globally competitive tier 1 products that can go out and play in very large spaces on a global scale. And I think that's where the value comes from, which no real accounting report will capture, right? So we'll keep growing at a very strong pace. We'll stay very profitable. We've done a number of acquisitions, as you've seen, and we'll keep on strengthening the portfolio. But the real value is the IP that we create day in and day out. And I think that portfolio really is a significant amount of value that's captured in our info.
Okay, so you continue to grow at 30-35%. Your margins you're confident of holding at around the 20-22% odd, and the ROCs as well in the vicinity of around 20%. Is that the broad guidance?
Yeah, that's the broad guidance. So ROCs, we have a very, very high bar when it comes to any new investments. So we typically target 25% or more in terms of capital on any new capital we're putting to use. Yeah, so that's broadly the picture.
All right, ROC of 25% is the target on more capital that's incremental capital that's being allocated. Well, thanks a lot, Ashish, for joining in and giving us a sense about how you see business shaping up. We'll keep an eye out on those targets because for the time being, the stock has run up considerably. The profitability for the last year was around 150 crores. So execution from year on will be tracked as well. For the time being, we slip into a short break. On the other side, our technical experts will be joining in. Mitesh Thakkar as well as Sudarshan will be joining in. Welcome back. Well, as promised, let's get in our technical experts. Mitesh Thakkar and Sudarshan Sukhani join us on the show. Good morning, gentlemen. Hope you'll had a good long weekend. Well, let's get straight to the action. The GIFT 50 suggesting we open up with a gain of more than 100 points. Sudarshan, you go first. How would you trade this bump up?
Yeah, good morning. Well, see, we are making new highs. New highs are bullish. The market is in a strong uptrend. So there is only one trade in this market for the Nifty and the Bank Nifty. You be long. Now, for those who are long, I would suggest stay long. This is probably not the end of the up move. For those who want to re-enter or add to their positions, a gap up is not a good place to enter. During the day, invariably, we find either a dip or a consolidation. Go long in that period. The markets may go higher than where they open up eventually. There's a word of caution also. That caution is that this market is relentlessly moving up. And since that doesn't really happen all the time, we may see a pause suddenly. To protect yourself, keep a stop loss which should be about 200 points from your entry price.
All right, we have Mitesh Thakkar who's also with us. Mitesh, hi, good morning. Good to see you in. This market has been so relentless on the upside, and any bad news that's been thrown at it, it's sort of emerged victorious. Do you think it could put on some more weight over the next couple of weeks? And what is the strategy for today?
Good morning, Sonia. Good to see you. My sense is that the trend is definitely on the upside. The market is making higher highs and higher lows as a pattern on the hourly to hourly charts. The only worry is the PCR, which is now inched up to 1.4. So what I'll do is I'll be slightly aggressive in trailing my stop losses. So let's say today, if we get an opening of about 100, 110 points on the higher side, which means that we could open around 23,575, 60 zones. I think I would want to see the stop loss to as high as about levels of 23,490. So, just a 70-point trading stop loss. So, tighten up the stops a little bit. Of course, any dips would be and any pullbacks would be buying opportunity. So, the directional bias remains on the upside, but tactically, I would want to, get my stop losses closer to the current price.
Okay, all right. What about individual stocks? Mitesh, you go first. What are the ideas you have for us?
Good morning. I have all buy calls today. Indian Hotels is a buy with a stop at 600 for targets of 640. GMR Infra, I think there was some positive news on Friday and it also made a fresh high. That's a buy with a stop below 91.5 for targets of around 98 to about 99. A buy on LMT Finance with a stop at 174.5 for targets of 190. And City Union Bank is a buy. Keep a stop below 148. Look for targets of 150.
Okay, thanks a lot for that. Sudarshan, what about you? What would be your top ideas for the day?
It's also an all-buy list. That's the only way to trade this market. Jindal Steel is a buying opportunity with a stop under 980. Ipca Labs may be bottoming out. This is a buy on dips idea. Either it works big time or it doesn't work. Buy with a stop under 1120. PNB is a buy with a stop under 117. And finally, NMDC, another PSU, buy with a stop under 243. Focus on good quality stocks, stay on the long side.
Okay, focus on good quality stocks and stay on the long side. Got it. Mitesh, I wanted your thoughts on, some of the movers news-wise, right? I mean, there's news on Interglobe Aviation, there's news on M&M, all positive news flow. But do you think that there could be more on the technicals as well on the upside here?
I think, the entire auto pack has been doing very well. And M&M has been one of the leading stocks there. Still looks good to me. The only thing is that it's met the targets which we had. It's kind of, continue to make fresh highs. The way to trade this would be to take your stop to about 28.70 or enter if you want to enter afresh with that stop at 28.70 and look for targets in excess of 30.60, 30.80 zones. And on Indigo, we have had some kind of a pullback in the last few days that, bull deal came into picture, and it's now trading around the 20-day average. If it can reverse from here, I would want to see the stock get past 4,300, then take a long with a 40-45 point kind of a stop loss and look at a target of around 45.20 to begin.
Okay, all right. Thanks a lot for that, gentlemen. Well, for the time being, we'll slip into a short break. We come back, we'll get you the pre-open rates. We'll also be joined by Karan Tharani of Elara Capital to discuss Zomato's potential acquisition of Paytm's entertainment business. Stay with us.
Welcome back. Well, let's get you some more cues and some more trades. We have Sneha Sheth, derivatives research analyst at Angel One, joining in for some F&O ideas. Sneha, good morning. So what are the trades you're working with today?
Very good morning, Surabhi. If you look at the market, yes, the chart structure is quite strong, and we expect an up move beyond 23,500, which has been acting as a resistance. So I have a two buy call. The first one is SBI. If you look at this counter, the counter has been consolidating after a strong recovery from the 89 EMA on the daily chart. I believe we may see an extension of the recent uptrend towards 877. So that's a buy, and the target would be 877, and the stop loss can be maintained around 827. Apart from this, Excite Industries. This is the counter which is having a very strong chart structure, and up move has been supported with the decent volumes. It is already trading near the record highs, but I believe we may see an extension of this move towards at least 574. So it's a buy with a strict stop loss of 529.
Okay, all right. Thanks for that. Well, those are a couple of cues. Siddharth Khemka is still with us. So Siddharth, let me get your views in now that earnings season is over. A lot of companies, we just heard about Jefferies raising their target price on M&M and raising their earnings estimates as well. What has your overall takeaway been? Any stocks where you think earnings upgrades are likely to take place and perhaps one can still buy into them? What does your basket look like?
Yeah, so Sonia, I think, yes, the earnings cycle has been pretty good, and even Q4, the earnings was much better than our expectation. And on back of that, we have only raised our estimates, earnings estimate for the next 2 years as well. So Nifty, if you look at what we are expecting now, marginally increase, we now expect Nifty earnings to grow about 16%. 15 to 16% for the next 2 years. And some of the key stocks, if you look at the index heavyweights, which have kind of contributed and could see further upgrades. So we have SBI, Tata Motors, HDFC Bank. These are some of the stocks where we believe that the upgrades could be even stronger compared to what the street is expecting. And among them, SBI is something that figures among the top. It has achieved a new milestone in FY24, crossing the 600 billion rupees PAT profit, and we see the balance sheet strengthening, NPAs reducing to 0.5%, and the company is expected to deliver a 16% CAGR in terms of loans growth, in terms of earnings growth also, and return ratios improving. ROE is at 1.1%, ROE is about 18.5%. So among the stocks within the heavyweights, SBI is something that we like. We believe valuations are comfortable. Tata Motors is another one where we believe earnings could see more upgrade. And among the laggards, HDFC Bank is the third one.
Okay, so those are some large cap names that are on your radar. Got that. Siddharth, what's the view on OMCs now? Anyway, keeping those stocks on the radar because crude has moved up quite substantially. But what is your take on the three? There's also a lot of talk, of course, last week gas stocks were in focus because there's some buzz around gas being, now incorporated in the GST framework. So just thoughts, oil and gas and topics?
Yeah, Shulbi, I think, yes, oil and gas is something that has been doing well. We have a positive view there. Some of the OMCs are doing well in terms of earnings, as well as there are a lot of other developments. For example, both HPCL, BPCL will be having their bonus in some time. That is also something that the street is liking. The windfall tax has been reduced. That is another positive. And we believe any movement, shift in the tax regime to GST, that will be also positive for the entire oil and gas space. So while we continue to like the OMCs, our preferred pick within that is IOC, followed by HPCL. In the gas space also, we continue to like GAIL, where we believe the expected robust demand with gas transmission volumes expected to reach 132 MMSCMD by FY25, and we expect a steady 10 to 12% earnings growth over the next 2 years. So that is something within the gas space. So we like IOC within the OMCs and GAIL from the gas space.
Okay, all right. Final question, Sid, before we let you go. IIFL Finance, they came out with their set of numbers. They've raised some capital as well. What's your view on this counter?
Yeah, so I think IIFL, some concerns have been there on the latest development with the RBI thing, but I think results are more or less decent. There has been a PAT miss due to the MTM losses on the AIF investments. Gold loan ban has resulted in 5% fall in the gold loan AUM. But what we see is that management is now saying that it is compliant with all the RBI observations. The special audit commissioned by RBI has been completed and the RBI review is awaited. So the company expects any positive development soon, which should be a trigger. Stock trades at a good valuation at 1.2 times FY26 price to book, 8 times P. And the only concern is that we need to understand the magnitude of the rundown in the gold loan portfolio, which will impact the financials for the current financial year, given that the ban is not has not been removed. Barring that, we continue to have a positive view. We believe the stock could do well. The core business is doing well, and once the ban on gold loan is removed, I think the street would again start liking the stock. So maintain a positive view on that IIFL.
Okay, Siddharth, thanks a lot for that. Well, for now, the pre-opening rates are settling slightly higher, up about 40 odd points. Nifty hanging on to 23,500. So we'll wait by for these rates to settle. But Mangalam is with us to give us today's momentumizer stock of the day. Mangalam, what do you have?
Well, on Friday, we saw a big move on All Cargo Gati. The stock was about 13.5% higher. But barring that, it's been a bit of an underperform. For the month as well, it's down about 10%. From its 52-week high, it's down about 40-odd% itself. What caught my attention was a big jump in trading volumes, not just on Friday, but all of last week. In fact, the average daily turnover traded volume for the last week was 26.5 lakh shares. And if you compare the average of the previous 4 weeks, it's just about 4.2 lakh shares. So telling you that, there was increased activity with the share price rising on Friday itself. And that reflected in the delivery volumes as well. On June 14, that's Friday, nearly 23 lakh shares were marked for delivery. And all of last week, on an average, over 1 million shares were marked for delivery, every day of last week. And this compares with just about 2 lakh, 3 lakh shares that would get delivered in the previous 4 weeks itself. So big jump in volumes, big jump in delivery. And now we have some news as well. On the 14th, the company told the exchanges that their MD CEO Piroz Shah Sarkari will actually retire with effect from November 30th. So new leadership, the search for new leadership is underway out there as well. And on June 13th, one of the PMS holders, Equity Intelligence, the one held by Purinju, sold about 0.67% stake in the company on June 10th. That was informed to the exchanges on June 13th itself, and Equity Intelligence still held about 2.9% stake in the company. So with a seller coming in and the stock rising, the important part is who is the buyer and what's the outlook here? Will there be more selling and will there be strong hands buying into this stock or not is the big question. There is delivery volume and the stock is moving higher.
Okay, all right, got it. Thank you very much, Mangalam. We'll keep it on the radar as well. But let's go back to a story that, in fact, Mangalam was talking about just a while ago. Paytm being perhaps in talks for a potential deal for the sale of its entertainment business with different entities. And one of those entities perhaps could be Zomato. This is, of course, as per reports. Now, Zomato could be planning to buy Paytm's entertainment business in a deal size of 1,500 to about 1,900 crore rupees. To talk about the potential implications of this, we have Karan Thorani of Elara Capital joining in. Karan, good to have you on. So interesting development coming in here. And I was looking at the properties, I mean, to understand what comprises Paytm's entertainment business. And then, Mangalam reminded us that it does have marquee properties like Insider and, a couple of these big events, lifestyle and culture events, music and food events that do draw in a fair amount of crowd. The question is that do you think it makes sense for Zomato to be spending somewhere between 1,500 to 2,000 crores to snap up these properties?
Hi, Sylvie. Good morning. So I think if you look at the events business per se, I think it's quite an attractive business. The market growth is, about more than 20% Zomato already has a presence in this business. They make revenues of close to about 450 crores in the live business. So I think they want to potentially, scale up this business, and the acquisition of Paytm would be more, pertaining to that. Now, in terms of, making sense, I think it all depends in terms of what kind of valuations they're asking for. So if the numbers were to be believed as per report of 1,500 to 2,000 crores, and I think that's a fair valuation, because if you look at Paytm's live revenue as per reports, it's been in the range of about 1,600 to 1,700 crores. So you're buying this at about 1x trailing revenues. So I think that is kind of attractive. Also, I think to add the point here, Zomato has kind of acquired companies in the past and has seen a turnaround. So for example, if you look at Blinkit for that matter, they acquired Blinkit at close to $600 million. And today Blinkit's valuation is somewhere close to about $7 to $8 billion on a forward basis. So I think, we have seen Zomato acquiring these kind of companies, doing a turnaround kind of a thing. Plus, what it gets here is also a user base. So we can't forget the fact that, Paytm Live has got an existing user base, which will help fill up Zomato Live user base as well. So I think it's a good strategy. How they execute it, how the turnaround happens is a key monitorable from here on.
So I think they're also trying to grow their going out business, right? Which Karan has a revenue currently of around 260 crores annually. How much do you think this deal, if and when it goes through, can add to the going out business? What kind of growth are you looking at there?
Yeah, so as I said, on annualized basis, FY24 roughly the live business is about 400 odd crores. And if they were to acquire Paytm Live, you could see the number, touching about 2,000 crores. Now, in terms of, overall revenues, currently the live business is a very small part. And even if they were to acquire it, not going to have a big positive impact in terms of the revenue as well. So I think revenue scale is not something which will happen on a console basis. We not see massive revenue upgrades. But the monitorable here is in terms of the profitability and the losses, right? In terms of what happens over there. So, for example, if you look at Book My Show, as per numbers in FY23, Book My Show did make about 12% EBITDA margin, and they were making about 100-120 crores of EBITDA on an absolute basis. We actually do not know in terms of what is the kind of EBITDA profile of Paytm Live. And for example, if this is at a break-even point or a EBITDA positive point, it's not going to have a big positive impact. But if at all they are making losses, this is going to have a big negative impact in terms of their console, PAT for Zomato. Because if you look at Zomato's PAT, we are estimating a number of about 1,000 crores in FY25. So if at all there's a potential loss because of acquisition of this business, this will have a near-term negative impact.
Okay, all right. Hi, Karan. Good morning. So we've spoken enough about Paytm as well as Zomato. What about Nykaa? Post their investor day and the presentation that they put out, what's your view on the stock? You've been positive even at lower levels, but at current reckoning, I think 185 odd. What's your view?
So I think Nykaa, we have an accumulated rating right now. We have a target price of 195. We believe that, in terms of the growth rate for the BPC segment, the management is very confident that they will be able to maintain the market share of 30% going ahead as well, despite competitive intensity from quick commerce and, other new players which are emerging in. But the problem for Nykaa is not the growth in BPC. I think the problem is the profitability in the BPC segment, because, we had estimated about 100 bips improvement in terms of EBITDA margin for the BPC business, which may not come because they will either try to, invest into A&P spends to drive more customer traffic, or, kind of invest in terms of discounting because of higher competitive intensity. So I think the problem there is that, and, valuations are not cheap. That stock is available at about 68, 69 times core BPC segment. And even after assuming that 20% earnings growth, I don't see a potential of more than 75 times core BPC business valuation. So I think not too much of upside there as far as BPC is concerned. But yes, some green shoots in the fashion business. The management came out to be very confident that, they're going to break even in the fashion segment by FY26. This is something, which is a very good thing in our opinion, because, in the last 4 to 6 quarters, we have seen fashion business performance being volatile. Losses have increased, come down, growth rates have been volatile. So now they've given a correct path and a guidance in terms of fashion business. They plan to grow this by about 35-40% annually in terms of revenue, and they plan to do a break-even by F26. So execution is the key here. So if at all, fashion business execution is the key, you will see fashion business kind of seeing a turnaround and a positive impact in terms of valuations. But again, as we speak, the fashion business valuations are not more than 10-15%. So the bigger delta will come from BPC and not from fashion, even if the execution is good.
Okay, just clarifying on the number on Zomato, which you mentioned, Karan. You said the revenue of the lifestyle business for Zomato, which is the entertainment business, right? That's what you called it, the Zomato Life business,
yes.
which right now is 400 crores. It will go up to 2,000 crores if the acquisition happens. That's the revenue implication.
Yes.
Got it. All right. Okay. Thank you very much. We'll have a more detailed call on this, indeed, if things fructify. And thank you for joining in today and giving us your initial thoughts. Well, with that, let's get back to the pre-open and back to some technical calls. We've got Sudarshan with us. And by the way, in pre-open, the Nifty is up a whole 100 points. Sudarshan, what's the stock you'd go with now? What's the 910 call?
Well, consider buying Jindal Steel with a stop under 980.
Okay, Jindal Steel with a stop under 980. Got that. And Mitesh, what about you?
Indian Hotels, I would recommend buying for targets of around 640.
Okay, Indian Hotels is on your list. Got it. Well, let's also look at some more stocks on our radar. First up, we have M&M, right? So M&M, if you look at it, the stock in pre-opening is up almost, I think, about 1.5%. Yes, a lot of brokerages have positive views on M&M, so let's get straight to it. Jefferies has raised their target price on M&M. We just get that up to about 35.10 from 29.10 earlier. Now, Jefferies has also raised their earnings estimates on M&M, so keep that in mind as well. And apart from that, a couple of other target prices that have been raised. Nomura has a buy with a target price of 3,374. Morgan Stanley has an overweight with a target price raised to 3,049. Now, the key takeaways from the investor day were this. One is that the company will capitalize on their market leadership in both the farm and the auto segment. They are looking to unlock full potential in the IT and the financial services space. They're looking to deliver high growth in new ventures. Their SUV segment is growing by leaps and bounds, and their market share has risen from 15% in FY21 to 18% in FY24. They showcased 3 new electric SUVs as well, and they're planning to launch 30 new SUVs and 3 facelifts over the next 6 years. As I said, Jefferies has raised their target price, and they expect auto volumes to rise at 14% compounded growth rate over FY24 to 27. Now, we are also going to get you an exclusive conversation with the top management from M&M from their investor day that happens at 9:30. The conversation happens at 9:30 a.m. today, so do stay tuned in for that. But that is one stock on my radar.
Okay, we remind that the big stock of the day, and in fact, management sounding extremely confident with regard to the way ahead. Well, there are other stocks in focus, though. Vamakshi joins us to run us through that neat list. Vamakshi?
Well, absolutely. Keep an eye out on HFCL, Sterlite Tech, Apar Industries as well as Polycab. The European Commission has levied anti-dumping duty ranging between 8.7% to 11.4% on optical fiber cables from India. Keep in mind that they've exempted HFCL from this list. However, it is a key negative for Sterlite Tech, Apar Industries as well as Polycab India. Hindustan Oil Exploration is another counter that we will be focusing on. In Block B80, the export flow line is cleaned up. Both the wells D1 as well as D2 are lined up for production, and the current field production is about 1,300 BOPD and 6 MMS CFD of gas. This block is important for HOEC, and therefore the development is positive. HBL Power is the last stock we are watching out for. Indian Railways is set to float a mega tender of almost 5,000 crores for the Kavach system, is what reports are indicating. HBL Power Systems is one of the manufacturers of the Kavach system, and as a result, this bodes well for HBL Power.
Okay, thanks a lot for that. By the way, M&M is not just the biggest gainer today, but it has been the biggest gainer this month as well. In the month of June so far, M&M is up almost 20%. So, the gains are already in. I don't know how much of the good news is in the price, but don't lose sight of the fact that it's been a big rally that M&M has had already, and not too far behind are other auto names like Hero MotoCorp that have gained about 14% or so. But we have less than a minute to go for the market to open, and remember, the market continues to hit record highs, and this morning as well looks like we could build on to our gains. It's a 4% rally that the Nifty has seen in the last 2 weeks, and it's been the biggest 2-week gain that we have under our belt since December of 2023. The good part is we've seen buying both from FIIs and DIIs in the last couple of days. Global cues are also solid, so looks like we are all positioned to have a positive opening in trade this morning. So let's get the first tick on board. We have the Nifty at 23,530, which is a gain of 61 points. A good opening, decent opening for the market. At least the first tick is suggesting that. The mid-cap index is up about 190 odd points, looking good over there. And the Bank Nifty is up almost about 100 points as well. So decent opening for the market. It's led by M&M, which is up 1.5%. Infosys is up about 0.7%. Adani Enterprises is up almost 2 odd %. Adani Ports, ONGC, Wipro, BPCL and Axis Bank are a couple of other stocks that are trending in the green right now and leading from the front. We have from the FMCG space Britannia and HUL that are leading from the front as well, 0.5% higher there. And a couple of these commodity names like Tata Steel are also making their presence felt, up almost about 0.5 odd %. What's dragging the market this morning is Dr. Reddy's, down 1.5%. HDFC Life under a bit of pressure, but that one's been a big underperformer in any case. Reliance Industries a tad bit soft, nothing alarming. Divi's Labs is down almost 0.5%. TCS is down about 0.5% as well. But otherwise, it's a good-looking screen, actually. The Nifty at the moment is at 23,529, which is a gain of 60 odd points. And the Sensex up almost about 200 odd points. So decent start for the morning. Advanced decline ratio is very, very healthy at 6:1 in favor of the advances, guys.
Well, that's right. And just take a look at a few stocks in the broader markets. They're flying away. HAL, the MOD has issued RFP for procurement of 156 light combat helicopters. Well, that stock is one of the top gainers in the F&O basket. It's up closer around 5% or thereabouts. You have a few more notable movers. BEL, well, that's another good mover from the F&O basket. That's up closer around 2.5%. On the flip side, Biocon is down 1.5%. HDFC AMC, well, that stock as well is under some pressure. From the cash market stocks, well, HFCL, that stock is high. I think Sterlite Technologies as well should come up for you because the European Commission has levied anti-dumping duty ranging between 8.7% and 11.4% on optical fiber cables from India. But they've exempted imports from HFCL as well as its subsidiary. So that explains why HFCL is one of the top movers. It's up close to around 6%. HOEC as well in block B80, the explode flow line is cleaned up. So that's an important development because remember, B80 is something that the street has been looking at very, very closely. And HPL Power, the Indian Railways, is set to float a 5,000 crore mega tender for introducing Kavach automatic train protection technology. So that one, in fact, is up close to around 10% or thereabouts. Home distilleries, well, there have been allegations with regard to use of child labor. So that stock, I think, is down close to around 15%. Full of Soam distilleries getting smacked up. Now it's recovered, actually. It was down more than 10% in the first tick. Still down 6.5%. Survey.
Yeah, company hasn't spoken anything about it. The news reports are pretty disturbing. It came out over the weekend. And they said there's some actions being taken as well. But anyway, that is Soam on the upside. Godavari Power and Ispat are still flying around. The price at which the company is looking at that buyback is 1,400 rupees. The current market price is 1141. Explains the excitement out there. By the way, IIFL Finance is reacting quite okay to those Q4 numbers. We'll be speaking with the management a little later on the show as well, so do stay tuned for that. It's now up about 3%. Paytm slightly positive as all that buzz around Zomato and Paytm continues. And Zomato is about 0.5% on the upside as we speak. So those are some of the early trades coming in. Look at other stocks flying. J. Kumar Infra, 7.5%. Mazgaon Dock, about 5.5%. Garden Reed Shipbuilders, so the shipbuilders are at it again. 6%, 7%. I mean, these are big moves coming in earlier on. BLS E-Services, that small acquisition that the company has done, that seems to be going down rather well with the street. Stock is up about 5.5%. So these are some of the early movers. Look at Paras Defense. Remember, on Friday, these stocks were on fire. Defense stocks, shipbuilders in particular. And there's more of the same that's playing out. I mean, even after the 3-day weekend, it's not been enough to cool off these stocks. Paras is up almost, it was 20% circuit on Friday. I remember it's 14% straight away off the races. this Monday morning. So yeah, the mid-cap market continues to be extremely buoyant as we look at things, and the Nifty is holding up for what it's worth. The only problem for the Nifty is that once again, it's the same grouse. Banks are not firing.
Well, and PTM, the stock has almost moved into the red actually as we speak. So the stock was up and about, but now it's come in for some profit taking. We had the management of Orient Pro as well. They were guiding for growth of more than 30%, margins around 20 to 22%, and ROC on 25% on the incremental capital. So for the time being, that as well is up close to around 5%. Another stock that we highlighted earlier today was GIPCL, that's Gujarat Industries Power Corporation Limited. That stock is up close to around 4%. We were highlighting that there's been a fair bit of delivery-based buying. We'll have to see how they execute, but they're talking about increasing capacity. So for the time being, that stock as well is up close to around 4%.
Just want to mention that the rise in Paras Defense that I was noting, that's courtesy of a large trade of trade of just about, I think, 1.8% equity that's just moved around, and therefore you're getting another 15% pop on Paras.
Okay, that's a big mover, 17% higher now. Just also wanted to mention on M&M, the stock is now at a fresh record, and the market cap of M&M, it's a fresh high, by the way, on the stock. The market cap is almost getting to 4 lakh crores. That's the kind of move that we're seeing. 3.7 lakh crores is the market cap that M&M has hit currently. So definitely firing on all cylinders, this one, and no dearth of movement there. If you look at it, as I was telling you earlier, the monthly gain on M&M is about 20% in 1 month, and the month is not even over yet. And the yearly gain is almost 73% on M&M. So that's the big mover this morning. Fresh record highs, but of course the market itself is at fresh record highs.
Absolutely.
So, a lot of these large caps are following suit.
But M&M had good company on Friday. A lot of other stocks were getting excited. Some of that is cooling off a little bit. Going forward, we'll have a huge chat about, of course, this big Hyundai IPO. But today, some of the other names like Maruti Suzuki, they're cooling down just that tad bit. Okay, so the market has settled with an opening tally of about 70 points, not bad. The Nifty very comfortable above the 23,500 mark. With that, let's move on and welcome our market master into the conversation. Okay, I think we're still waiting for our market master. Gautam Shah is going to be with us, and it'll be good to talk to him about levels because we're in blue skies and this market is moving on serious momentum. So what do you do? The only problem with that is, just to go back to the point on banks, look at this. HDFC Bank is still a drag. ICICI Bank is still a drag. Kotak Mahindra Bank is down about 0.25%. So that one piece for the market is missing. The other major leg from an index point of view is IT. And that's a stop and start. It's, blinks red, blinks green. One day you have a good IT day, and then it doesn't have a follow through. So that's been the problem with the other major pillar of the market, which is IT. Gautam is with us, so let's ask him how to navigate this. Gautam, great to have you on. So tell us, it's been an absolute phenomenal ride. Elections have come and gone, and exit polls have come and gone, and all-time highs are still here, despite banks still not firing away the way people would want them to. Let's start with your index call first. Do you think this good going can last?
Good morning. I think it's the kind of market where you don't need to apply your mind too much. All you need to do is just to control your emotions. I think that's the kind of bull market that we have been in for the last 6 to 8 months, because every single dip has been bought into beautifully. Local and global developments have been handled wonderfully. And I think the market is as strong as ever. As a technician, I always look out for overbought signals or topping signals. But even at current levels of 23,500, I don't see any such signals on the charts. In fact, after what happened on June 4th, I do believe that the market is internally and structurally even more stronger. And I think we are going to see much better days ahead, and the best is yet to come. Now, in terms of levels, these are blue sky territory levels, and therefore it's very difficult to pinpoint numbers. But, I always believe that the trajectory is more important than the magnitude. So the idea is to just ride this. But still, as a technician, if I have to put in some numbers, I think the next stop for the Nifty is around 24,100. But if I have to look at it more medium term, I think the platform or the foundation has been set for the Nifty moving towards a level of 25,000. And now with the underperforming stocks like HDFC, Reliance, and IT coming back, I just feel that it just makes the market a lot more stronger on an overall basis.
Okay, so this 25,000 target that you have, Gautam, do you have any kind of timeline that you're looking at? And the most common question that at least I get asked by a lot of investors is that, is it a good thing to buy even when the markets are at record highs? Because a lot of retail investors feel like they've missed out on this rally. What is your advice to them?
Well, I think in terms of timeline, I think the Nifty is going to grind higher. I think that's really been the case for the last 12 months. Even if you look at the last 6 months, we haven't done anything special. We started the year around 22,000. Today we are at 23,500. So in percentage terms, we actually haven't done as well as the screen might indicate. But I do believe with the election event out of the way, global markets very strong, Fed likely to cut rates over the next a few months, and the liquidity being extremely strong, I think all of these factors will take the Nifty towards 25,000. And I think by the end of the year, I think it's a fair assessment to expect the market to get there. I do believe that retail investors have participated to a greater extent because passive money is still very active. Maybe active money has not been able to do as well because the markets have been very volatile and behave like a pendulum. But I think even at current levels, there are many pockets in the market, that give you great opportunities. So if you keep looking at the Nifty, you'll feel scared or you'll feel uncomfortable buying the market. But I do believe pockets like banks, metals, pharma, FMCG have a lot of value and technical strength and can be bought even at current prices.
Okay. Hi, Gautam. Good morning. Good to hear the 25,000 mark. But you briefly mentioned banks. Where's the Nifty bank headed? We're at 50,000.
Nigel, I think we put out a very big call in our big picture report that we released at the starting of this month. And we made a point that the Bank Nifty is setting up for a 10,000 point rally over the next 6 to 12 months. So I'm actually looking at 60,000 on the Bank Nifty. Now, you might say what's going to trigger it? I think stocks like HDFC Bank will trigger it because the stock is coming out of 3 years of underperformance, and there is a very high probability that this stock, HDFC Bank, can actually go up to lifetime highs and well beyond. And it will be ably supported by ICICI Bank and SBI as well. So I think I like the entire banking pack. I think if the Fed and if interest rates were to go lower and if the charts were to discount that much in advance, I think banks is really one place to be in because the risk reward is excellent. And my fundamental analyst tells me that from a valuation perspective, banks are still quite cheap. So yes, banks could be one of the trade of the next 3 to 6 months. Risk reward is excellent. Valuations are good. And the money is flowing in because people are coming out of a phase of underperformance.
Got it. So banks could be the trade for the next 3 to 6 months. Got that, Gautam. Now, since you're sounding really optimistic on the market, let's ask you about the other part of the market where you see it and yet there is a sense of fear because these stocks have been shooting up non-stop for about 12 months. Maybe that's what bull markets are all about. You already know what I'm asking, Gautam. Your HALs, your Garden Reach ship, shipbuilder, all of these defense stocks, there's simply no gravity. There's, the correction around that election period was maybe 7, 8, 9%, and then now they're shooting back up again. Because either you have FOMO if you're not riding this trend, or you just sort of have to, let it go, stand by, watch and say it's not for me. What's the advice?
Well, Surabhi, I think at some point of time you have to let go. And I think we've come to a point where the momentum and the fashionable PSUs can be book profits into. I think with what has happened in the last 1 week, I don't see any confirmation on the charts to say that they will keep running at these levels. But there are many structural PSUs in the metal space, in the power space, in the infrastructure space, which I think still have a lot of leg on the upside, because they are still under-owned and they're still trading at single-digit PE. And I think the upside potential is large. So I don't think this is a time to be really committing into defense or railway PSU. I think that's a very clear call, even though I might miss a little bit of upside, but I don't think one should be chasing these stocks. On the other hand, the likes of Power Grid, NTPC, NMDC, ONGC, SAIL, NALCO, I think all of these stocks have a lot of headroom on the upside and can be committed into even at current levels. But I think since a lot of underperforming stocks and sectors are making a comeback, I think fertilizer looks very interesting. Paper looks interesting. The entire auto ancillary space, looks very, very interesting. Sugar has made a very good comeback. Focus on these pockets, and I think you will be rewarded with a very good risk reward.
Okay, what about autos? We've been talking ad nauseum about how stocks like M&M are hitting record highs and huge moves coming in, both on the fundamental and the technical front. Do you think there's still more legs to this rally?
No, I think they will get into a consolidation phase. I think the auto index is a little overdone at these prices. If you look at the weekly charts, we don't get the comfort that they can keep running. It's been a vertical move, for the index and for most of the top stocks. While we continue to like Escorts and Eicher Motors, and I feel it can deliver supernormal returns even from here. The other top auto stocks should not be looked at. On the other hand, I think the auto ancillary space, and with the likely entry of Tesla into India, I think there is renewed strength in the last 2 weeks. And I think the screen and the charts are indicating the same. So more than the top auto stocks, I would look at auto ancillary. I think that's a mega theme which is developing and is likely to see far greater upside.
Okay, Gautam, have a great day. Thanks a lot for joining in and speaking to us. By the way, the market is consolidating. It's not this runaway rally like we saw in the last 2 weeks, just sort of buying time around these levels. 23,500 is where the Nifty is. The Bank Nifty, by the way, has slipped a tad bit into the red, so maybe you could get some volatility there. But as we were talking about, one of the big stocks in focus today is M&M. It's hit a record high. It has almost now, it's getting to a market cap of almost 4 lakh crores. This is a CNBC-TV18 exclusive. The company during its investor day said that they plan to capitalize on market leadership in the auto and the farm solutions business. They're also looking to unlock full potential in Tech Mahindra and Mahindra Finance. My colleagues Nimesh and Surbi caught up with M&M's Group MD and CEO Anish Shah, Executive Director and CEO of the auto farm sector Rajesh Jejurikar, and we also have the Group CFO Amar Jyoti Barua, who spoke to us. Listen in.
Growth and returns has been in our DNA. Yeah. So if we look at Mahindra Group going back to 2002, we were in fact the fastest and the best performing stock in the Nifty for 17 years, from 2002 till August 2018. We have now reclaimed that position, but it's been something that the group has been used to doing for a long time. Yes, there were some lessons along the way. We fixed those, but for us it's about continuity and change. The road ahead is more of the same. Keep our head down, focus, execute well, and grow our businesses.
Anish, the big difference after you coming in 2015-16 and until now, I think what market has appreciated is the capital allocation, and you've been talking about it in every forum that's going to be the key focus. We've seen that over a period of last 3-4 years that's been the key mantra for you. Is that going to continue? And from that perspective, how do you justify buying a small stake in RBL Bank?
So capital allocation for us is about strong execution. It's delivering on what we commit. If we acquire something and we forecast 20% returns, we should deliver 21%. It's not just about exiting businesses. That's the easy part. Actually, it's not that easy, but that is one that is easier than delivering on commitments. And RBL Bank was, in many ways, a treasury investment with a strategic option. It is a 400 crore investment in a sector where we've got 40,000 crores at stake.
For the benefit of viewers, 4,400 crores in the auto business, over 6,300 crores in the farm business, and almost 7,000 crores in the services business. What's the plan? And again, more numbers here. I know you're looking to invest, I think, 27,000 crores in the farm and the automotive sector over the next 3 years, 12,000 crores in EV. Let me not bore viewers with more numbers, but that's serious, money commitment as well. So just tell us what the key growth focus areas are going to be.
So we've got 3 areas of growth. First is auto and farm, where we're going to capitalize on market leadership. Both businesses have significant growth drivers, and in fact our investors appreciated that a lot today. In fact, many came up and said, we didn't realize the level of growth drivers you have even for the farm business, while auto is more well recognized. Second is unlocking full potential in Tech Mahindra and Mahindra Finance. Both are businesses that are very strong franchises. Both have had some struggles in the recent past and have underperformed their peers. But the lessons from there have put significant plans for growth over the next few years. Mahindra Finance is well on the path to turnaround. TechM with Mohit Joshi coming in has just commenced its turnaround. And both are businesses that I think are going to be very good for the investor and obviously for the group. And then the third is our growth gems. This is a set of 10 businesses. All of them have great potential. We have increased the valuation of growth gems over the last 4 years by 5x, from roughly 0.9 billion to about 4.2 billion at the end of the last fiscal year. And these are therefore the 3 growth drivers for us.
So we'll speak about the gem companies in the next set. But, Jejurikar, coming to you, because you spoke about farm and the auto as a big growth driver. How are you taking this vision forward, and what are the key things that you will be focusing on in terms of execution next year?
Yeah, so I'll try and, Nimesh, thanks for the question and thanks for being here with us today. On the farm equipment side, one question which has been on a lot of people's mind is, has the tractor market saturated? And, that question tends to kind of come with the heated intensity when there's a one-year down cycle. And we know that this industry is, is cyclical, and that's doesn't take away from the fact that in the last 15 years it has had a CAGR of about 7% plus. But what we did put out today, and I guess you've seen that data, is there are several growth drivers for the tractor market here. We are very far from saturation, and we would expect to see, the industry grow at a faster rate as we go forward, because fundamentally, to meet the food needs of India, the farm productivity has to improve, and it's not going to improve without greater level of mechanization, especially because there's much more intercrop cultivation going on. There is a decreasing labor force availability. So there are several enabling factors to mechanization, and hence it is an imperative of the government to get a greater level of mechanization to meet the food needs of the country. So that's one key driver. The second one is around, opportunity in global markets, and we've recently launched the OJA, which is actually 4 platforms. As 3 are ready, 1 is under work, which allows us to get into new markets, but also strengthens our position in some of the big markets we are in, like North America and so on. So just in summary, these are 2 big growth drivers. On the auto side,
everybody wants to listen about the new launches and what more excitement that you're going to bring to the market. So maybe we can talk about that.
It's a very sort of heavy pipeline as well, right? I think 9 ICEs, SUVs. You're looking at, of course, the Born Electric portfolio, expanding that as well. So lots of launches lined up. Tell us a little more also on the EV side, where you're putting 12,000 crores to work over the next 3 years.
Yeah. So let me quickly, take on the ICE portfolio first, and then we'll talk about electric as kind of 2 different levers. So on the, so when we actually had a slide, you would have seen that on market mapping. And there's one part of the market which is 50% of the industry, where our overall volume market share is 18.5 or so, and we are number 2 by volume, number 1 by revenue market share. But in 50% of the market, our volume market share is 13%. So we have a big opportunity to gain share there, and products which we've recently launched, the 3XO, allows us to do that. So there is we are number 5 in that segment in the compact segment by way of rank. So and we think we really have a strong proposition with 3XO, which can make us number 1 or number 2 or 3 years. So there's a lot we can do in ICE, many new products, some refreshes or mid-cycle enhancements, as we call them, some completely new products. So, and we want to stay invested in ICE, because at least 70% of the market 3 years from now will be ICE. The Born Electric portfolio, which we'll launch in 2025, is actually about a lifestyle experience, and we are looking less at here's an EV option. It's more about here is a emotionally charged new SUV, which is superly designed, tech driven, fun to drive. And, it's the kind of thing you should want to buy with a lot of emotions. And there are some, and there's a very, very strong rational reason as well.
The challenge is, there is a lot of waiting period to buy your car. So it takes almost 8 months, 9 months, or almost a year now to get into.
We are very focused on trying to bring that down.
Great.
And we have done quite a bit of that in the recent past.
We have triple capacity, which has helped get those waiting times down significantly.
Let me ask you one more thing, because you folks have done phenomenally well on the SUV side, right? Pretty much the flag bearers and everybody else entered. And interestingly, we're talking at a time where we might be seeing one of your peer companies, global peers, come out with a listing as well. So big times for the sector. How confident are you about maintaining this rate of growth? I know you're guiding on SUVs. I think you're guiding for mid to high teens growth in this year, FY25.
Yeah.
But how competitive is the market, and how confident are you of maintaining your position?
The market is competitive,
Yeah.
because now 60% of the passenger vehicle industry is SUV. So
Exactly.
it is the main industry. It's no longer the thing that you did on the side.
Yeah.
So it is the mainstay of the industry. And which is why we feel good about the fact that even though we have the highest average price point, we are number 2 by way of volume. So we're doing more than 40,000 vehicles with the highest average price, and which is what makes us number 1 by revenue market share. And I think that's a reflection of the very strong product portfolio we have. And many people who bought our products, the new products in the last 3-4 years, are actually creating that set of positive word of mouth or enablement as we were talking in the corridor right now, when 3 people say, oh, we drove this product of yours, it's a wow, it gets 3 more people to say, let me also have it.
Mr. Baba, you're in the hot seat now. They all spoke about the kind of investment they're going to do. You being a CFO, how are you managing the entire cash flow for the group? And which are the key areas where you think there's going to be major investments over the next couple of years?
So, first of all, I just want to say that, Anish has made my life easy as a CFO because he has set a very stringent requirements for how we deploy capital.
Yes.
So I think that part has got a lot of discipline. What I have to ensure, though, is after we put in the capital, we actually realize the returns, right? So there is a lot of rhythms that we run internally that the CFO office has to enable. So that's one thing that I just wanted to highlight. In terms of where we are going to deploy capital, you already heard some of the areas. We've also today talked about one new area that we have been looking at for a while. In fact, we probably get 10 opportunities a month, and we have looked at them in depth and basically said it doesn't meet our 2 very stringent criteria, right? It has to be meaningful. We have to have a clear right of win. That's kind of a big part of what my job is. I've got to make sure any new opportunity that comes in, we are really looking at it.
Okay, so that's the top brass at M&M. And by the way, during the course of the day, we'll play out other snippets as well, because they're talking about the possible value unlocking in some of these growth gems that the Mahindra Group talks about. 3 of them are listed. Could they be bringing more Mahindra entities to the market? Catch more snippets of that conversation from the Mahindra Investor Day through the course of the day. Right now, we'll take a quick break, come back on the other side, and we'll connect with the Naveen Prakash Sharma, ED of Gravita India, to talk about the business outlook.
Welcome back. Well, a good start to the trading session. We're still holding with a gain of around 80 points. The Nifty Bank, well, that's moving between red and green terrain. For the time being, it's recovered some of those losses. It's up closer around 80 points out. In the breadth of the market, 2 stocks advancing for 1 stock that's declining. So that's good news as well. So let's turn the spotlight on one such mid-cap stock, Gravita India. It reported a good set of numbers. In the last few days, the stock has seen a big run. Today, it's down closer around 3%. But if you pull up a last 1-month chart, you'll see the stock is being seen a fair bit of action. To understand what's the outlook from here on, Mr. Naveen Prakash Sharma, the ED at Gravita India, joins us on the show. Hi, Mr. Sharma. Good morning and good to see you. And thanks a lot for joining in here on CNBC-TV18. Let's talk about the industry first. Could you tell us, in terms of the, the total lead recycling industry, how much of it is in the formal segment right now, and how much of it is informal? And the next 2 years or so, how do you see that changing?
Yeah, so lead industries, we produce around 1.1 million tons of lead from recycling. So the primary producer is only one producer in India, which is Hindustan Zinc. They produce around 2 lakh tons. 85% of lead in India is through recycling. And this industry is going with a CAGR of 10 to 12%.
Okay, all right. But in terms of the industry size, the reason why I'm talking about this is because Kotak in their note, they are saying that as of now in the recycling segment, let's leave Hindustan Zinc aside, in the total, the unorganized market or the informal market is actually bulk of it, 75-80%. But in the next 2 years, because of the stringent changes, they believe the formal segment will gain more. Your comment on that, and what is your current market share in the formal segment?
So currently the formal sector is around 60%, 40% is informal. And with the policy changes like introduction of GST, and later on there are some regulations which have come like battery waste management rule, they will bring more towards the formal sector. So we foresee that there should be a great shift from the informal to formal sector. And we foresee that government will bring certain changes like reduction of taxation of end-of-life products. Like there is around the world, there is no tax on the end-of-life products. So they should bring some changes in the reduction of taxes or bringing them under reverse charge mechanism, wherein the tax is already included when the consumer dispose their product to recycling companies. So these things will bring certainly some changes into informal to formal sector. And currently among the formal sector, we are having our pan-India presence and we have our share of around 15 to 18%.
Okay, Mr. Sharma, hi, good morning. I wanted to understand in your core segment, which is your lead business, what is the kind of volume growth that you are assuming both for FY25 and FY26?
We foresee a volume growth of CAGR 25%. So we are maintaining it since last 10 years and we hope to maintain in time to come as well.
Okay, so 25% in both FY25 and 26, is it?
Yes, yes. It will remain for another 3 to 4 years.
Okay, and this does not include volumes from the lithium-ion battery business. How much could that be since things are picking up there?
That new business will be separate and we foresee that growth in that segment will start only after 2027 when there will be availability of lithium batteries from auto sector.
Okay, all right. So lithium-ion batteries as well as steel, they'll start contributing in a bigger way, say from 2027 onwards?
So there will be other products recycling which we plan to go, which includes steel, paper and lithium batteries. And we foresee those numbers only after 2027.
Okay, all right. Now, value-added products, VAP, that is the focus area for you. And it's gradually been moving up towards that 50% mark. So for the current year, what will VAP contribute? And also if you could tell us how much margin expansion can you see from what you reported in FY24? We're aware that the other income component as well is included in your margin calculation because you believe it's part of the operations. So VAP and margin improvement, how much will it be?
So we will be shifting more value-added products in every segment of ours. So we expect that that should increase to at least 60% in next year. And our margin improvement, like we are maintaining a PAT of 35% CAGR.
Okay, 35% CAGR. And what is the ROC that you're targeting? What is the consolidated both ROC as well as the EBITDA per ton that we can expect in the next couple of years?
ROC is around 25% and EBITDA per ton is around 16 to 18 rupees per kg.
Okay, all right. And if I had to ask you about the margin number, sir, it would be fair to assume 100 basis points extra. You give us, that you're looking at the EBITDA compounding at 35% growth is what I understood from what you said. So there could be 100 basis points improvement in this year in comparison to last year?
Yes.
Okay.
It will be basically not in 1 year, it will remain in the long run. When we say CAGR 35%, it includes some year, maybe some less, but overall in 4 years, you will see it is 35% CAGR.
Okay, you want to give us a margin outlook from year on, you're at around 11%. So for this year, will it be better than last year? How much will it be better? 50 basis points for this year?
It will remain not to 50, but yes, certainly it will improve.
Okay, you don't want to quantify that, but you're saying the trajectory from year on will be improvement. Got that?
Yes.
Could you tell us, what is the guidance on the debt? Give us an updated debt number. And your working capital got stretched a little bit in the past year. Guidance on both these two because you have a big capex plan. And tell us what should your working capital days look like in the coming year?
So current debt is around 450 crore. And we have a capex plan of 600 to 700 crore in next 4 years. Initially, in next 2 years, it will be 250 crore. And these capex should generate a revenue of 8 to 9x.
Okay, 8 to 9x, got that. So what is your peak debt, sir? And you have to comment on the working capital days as well. What does that come down to?
So working capital days is around, currently we have 80 days. And the peak capital debt is around 450 crore.
It won't go much higher because this entire 600 crores that you're talking about of capex will mostly be funded by internal accruals?
Yes, it will be from internal accruals.
And given the kind of run-up that you've seen in the stock price, do you think you want to come to the market to raise some equity?
As of now, there is no such plan.
Okay, so this 25% CAGR that you're looking at, the volume growth for the next 3 to 4 years, I'm sure this will come with some capex as well. You have spoken about 600 crore capex by FY27. Are you on track to doing that? And what is the capex plan for this year and next?
Yes, so in next 2 years, we have a plan of around 250 crore. And our capacity is currently recycling capacity around 3 lakh ton, which will go up to 5 lakh tons. So this growth will come from the existing verticals, capacity expansion only.
Okay, final question, sir, before we let you go. Exports is close to around 38% of your revenues. Is there any slowdown from the export market? And also, when you joined us the last time, you were talking about getting into newer geographies. Which are the targeted geographies for you?
So we are already present in Africa, as we mentioned earlier that we are at Ghana, Togo, Senegal, Mozambique, and Tanzania.
Yeah.
Togo was the last year addition. We are working some projects in Middle East and also in South American market and Central America, Dominican Republic. So we are working on those geographies. So that next growth should come from that area as well.
Okay. Any slowdown?
Export slowdown, there was big slowdown in last year, but this year it is on the track.
Okay. Oh, all right, Mr. Sharma. Thanks a lot for joining in. Appreciate your time here. That is the word coming in from Gravitas. By the way, don't lose sight of the markets. Just look at its zoom. 100 points higher now on the Nifty. And the sensex is up 340 points. So it is a fresh high that we're seeing on the market this morning, continuing to put on gains. I mean, the setup was pretty good, to be honest. There was buying from FIs and DIs. There were good global cues coming through. And there's follow-on buying in our own markets as well. But IIFL Finance is the other stock that we're looking at. The company says they will address the regulatory concerns. The board is forming a team to implement corrective action as well. Kapish Jain, the president and group CFO of IIFL Finance, is with us to talk about that. Mr. Jain, good morning and thanks a lot for joining in. As you would understand, shareholders as well have some concerns. So if you could tell us what were the issues that were highlighted by the RBI and by when are you confident of getting the RBI's permission when it comes to gold financing?
So the RBI order came on 4th of March and the issue that got highlighted were some of them were market practices, but then they were not in line with the regulations. One of them prominently was disbursements in cash of beyond 20,000 rupees. The second was auction not happening at a branch level, but they were happening at a district level. Now, disbursement at branches, disbursement beyond 20,000 in cash was something that was prominently there across all players. And then we were also aligned to what others were doing too, because the customer was demanding that. The auction not happening at a district level, but not happening at a branch at district level was because you really get a real meaty market when you go to a district level. At a branch, you may not find customers and the auctions can fail. To get a better value, you go at district level. But fairly, the regulations suggest that you need to first start at the branch level. So these were two very prominent ones. There were a few aligned to this as well, but we have addressed them all, and we have addressed them all both in spirit and also in writing. So the auction anyway is happening on a daily basis, and the auction is being aligned to the new process. Disbursements, we have made our systems ready to make sure that we don't disburse in cash beyond 20,000 annually. So from our side, generally, we have addressed all that we could from an RBI observation perspective. RBI very timely and proactively appointed the special auditor on 23rd of April, and they have concluded their on-ground inspection as well. And they are, I would believe that they would have submitted their reports to RBI. And RBI might be in the process of reviewing those submissions which has gone in. They were all largely aligned to the gold business, and given that we have addressed them in the right manner, we don't see any much hurdle coming in. It'll be very difficult to anticipate when this embargo will go away. But from my side and from our side, we are fairly ready.
But in terms of the timeline, any kind of timeline that you've got from the RBI and when you all can go ahead? And I'm sure there's a lot of damage as well, I mean, as far as customers are concerned, right? Because there would have been loss of customer trust, etc. Do you think it'll be a challenge to get that back on track?
No. So yes, in the short term, we have lost business. We have lost customers because we couldn't roll over the assets when they have come for a rollover. These are good quality customers. Our rollover and our stickiness with customers around 70% from a repeat customer perspective. But given the vintage of the relationship that we hold with those customers and our customer-centric approach that we have with our customers, we very strongly believe that everything else is in place. Our people, our branches, and the sooner this goes away, we should be able to get back and recoup our customers. Because it's not a loss of confidence, it's because of the situation where we are not able to service these customers.
Now, Kapish, hi. Surabhi here. Some more questions on your gold loan business. It is the largest business, right? I'm looking at the breakup of the book. At the end of the fourth quarter, gold loans were 8,264 crores. I mean, it's really towering over all your other segments. And that's where the hit has come. Just talk us through what happened on asset quality, because there was very sharp deterioration, specifically on the gold loan side. And then, there was some deterioration in some other segments as well. Your gold loan NPA, gross NPA, if I'm looking at the right numbers, has reached 3.8%. The book also fell quarter on quarter. The gold loan book, obviously, because of these reasons, it was down 5.5%. So give us an outlook on both asset quality. What is the repair roadmap, and then what's the roadmap on getting the book back on the growth path?
Yeah. So on the asset quality side, one is the denominator impact. If you notice, there's a 5% drop between the AUM that I had on as of 31st of December, and that's what I hold today. But the second reason is that the customers, when they have come for a rollover, I'm not able to do the rollover in these customers, so I need to find an exit for these customers, either through he himself paying off his outstanding, or I get a balance transfer done for the customer. This element has made some delays and caused some impact on the asset quality side. There's no worry here because these are gold assets. They are fairly well protected from the underlying security. The LTVs are in the 65-70% range, and gold prices anyway has moved up over this period. So all these have helped in making sure that there shouldn't be any impact on the P&L from a recovery perspective, but from a momentary perspective, there is asset quality blip which is coming. The regulations require you to provide adequately when you have a stage 3 asset coming in the NPA bucket. So we have made provision.
No, sure, but Kapish, hang on. And just to complete the asset quality bit, and then maybe you could give us a guidance on when does when does normalcy return to the gold business? So before that, just to complete the asset quality point, it's gold loans is one aspect. The other segment was construction and real estate. I know that's not very big for you, but still, the deterioration is massive. I mean, 0.4% going to 3%. So I'm not sure if there's a numerator-denominator thing there as well. Just guide us on total asset quality because, at a complete aggregate book level, your gross NPA is now at 2.32% at the end of Q4. Where will it be by the end of FY25?
So as stated, guidance on NPAs have been 2% or under 2%. And we've been maintaining that irrespective of whatever comes in, whether it's COVID or otherwise. Yes, even in the CRE book that you saw with regard to high-rise in NPA, it's again a denominator impact. The book has almost gone to half. We have shrunk it. Our stated objective has also been that we're going to degrow that. The YOY degrowth is around 30% there. So one is the denominator impact. Second is that some of this asset which is moved into in the stage 3 bucket, and that caused that NPA going up from a denominator impact perspective as well. We don't see, given that this book is shrinking and going down, the impact of this book on the overall P&L and balance sheet will only go down. And whatever has come as a blip from an NPA perspective, we should be able to resolve it. We don't see...
Back to 2% GNPA, Kapish, so go back to the question. FY25, will your NPAs, full year NPAs by March, 31st March FY25, will they be under 2%?
They should be under 2%. The only joker in the pack is when does the embargo goes away and when I'm going to come back from a resumption perspective. However, since the impact is on the gold business and that asset doesn't really give you too much of a P&L impact, we should be able to go under 2% by FY25.
All right. Hi, Kapish. Welcome to the show. The street is listening to what you have to say, and they're clearly looking ahead because the stock is now up 7.5%. Give us a couple of details, Kapish. As you said, the gold book, degrew by 5% in the past quarter. For quarter one, what should we work with? A 15 to 20% degrowth?
Very difficult, actually. So I see, if you see, it did by 5% with a 1 month impact.
Yes.
We don't give any forward guidance, and this number is not there in the market. But of course, there will be a dip. Whether you take the same permutation of what happened from 1 month impact and apply it for the next quarter, that could be a best guess. But otherwise, there's no such guidance that we give. But till the time that the embargo doesn't go away, and we almost on the verge of quarter one getting closed, there would be a significant dip, like what our MD also highlighted in his release.
Okay, all right. It'll be a difficult one, but I just thought I was trying to extrapolate the number because there could have been growth in Jan and Feb and then a degrowth. So, but it's going to be difficult. There's going to be a degrowth. We'll take that for now. You also raised money via rights issue. Could you tell us why and what's the utilization of this?
So the rights issue money was raised first a confidence equity and confirmation of confidence in the firm by the largest investor. One is the two promoters, Nirmal and Venkat. They participated fully on the rights issue, and the largest investor of Apex as well participated. So it's more of a confidence security to suggest that yes, there was this embargo which came in for some of the operational lapses that came into the company. Otherwise, fundamentally sound, everything is operating fine. We have a very good business model. We have delivered on a consistency basis, and we should be able to deliver going forward as well. The rights issue money also helps us to address some of the queries that can come in from bankers, from lenders, from rating agencies, because a healthy capital position in an NBFC does answers a lot of these anxieties that can come in. The capital is here for the company to grow. As sooner the embargo goes away, we should go to the new normal and be able to push up pedals for our growth in a very controlled manner for sure. But the opportunity exists and we have the expansion for us to just go and use the capital.
Okay, got it. We'll wait to hear from you once that happens as well. But stress has started to emerge in for other lenders in the MFI segment. I wanted your thoughts on that because your disbursals in MFI also declined quarter on quarter despite Q4 being a seasonally strong quarter for the MFI space. What's happening there, and do you think it could get worse before it gets better?
So there are two elements to your question. One is asset quality, other is growth, right? So asset quality has held well. We don't see any concern on the asset quality because we have certain risk management practices to make sure that we don't over-leverage to a particular geography. And that way, being a pan-India present company, we are able to expand ourselves while to address any kind of a challenge that come in from a particular geography or a market. From a growth perspective, we had grown at fairly decent pace last few years. And the objective is to make sure that we control ourselves there before any kind of a surprise comes in, because it was a very heated market because of the embargo of lending rate, which was earlier limited to 10% of the borrowing, no more being there. It became a more risk-adjusted pricing and people were gung-ho and going for growth. We want to just revisit the entire environment and go a little muted and slow. And therefore, this degrowth came in Q4. Going forward also, we believe that we're going to just make it a little more normalized with a growth horizon of maybe around 25 or 30%, and then take it from there.
So 25 to 30% is the growth rate that you're looking at in the MFI space, is it?
Around that range.
In which year? In FY25?
Fiscal 25.
Okay, and all right. So,
okay, on asset. Yeah, I just had a follow up on asset quality. Because overall your asset quality has worsened if you look at it quarter on quarter. So going ahead, just particularly for MFI, I know you gave us the overall number, but for the MFI space,
the asset quality has stood where it was last quarter as well. There's not too much of a movement there. Since the objective is to make sure that we grow controlled manner and keep all our other attributes under check, so asset quality will be maintained well, and we're going to make sure that we do that way as we grow in a controlled manner, maybe around 20-25%. On the overall asset quality, the big two movers, as I mentioned, was in the gold and the CRE book. Gold doesn't give you a credit loss. It's just a momentary thing, and that should get corrected. CRE is a more depleted book, half to what it was, almost like 1/3 to what it was 4 years back. So that's also going to not have too much of an impact from an overall P&L perspective.
Okay, all right, Kapish, thanks for joining in and answering all of our questions. We hope to chat again and figure out how the review with the RBI goes and when the gold loan business gets back to its original ways. Let's move on now. We have, of course, the market, which is still holding on to about a 90-point up move. Today, it's actually the reverse. Mid-caps are a little quieter. It's the large cap screen that's doing better. We'll take a break on that note, come back on the other side, and we'll have Manisha joining in. We'll find out what the major commodity cues are this morning.
Welcome back. It's a really good market, you'd have to say. The Nifty is up 100 points. Mitesh Thakkar is back with us. And this 100 points assumes importance because of the kind of rally that we have under our belt. I mean, in the last 14 days, the market is up almost 8%, and it's relentless, the up move here. Mitesh, give us your view. Do you think we can build on to these gains for the rest of the day? And if yes, what are the stocks that one should be looking at now?
So I think that can still happen because the bank Nifty is getting some momentum, and therefore I think I believe that we could see some positive traction. In fact, I have IDFC First Bank as one of the trade recommendation, so I would recommend buying that one with a stop at about 78 and look for a target around 84 here. That apart, I think Wipro is something which has come on the radar. So buy with a stop at about 484 for targets of 500.
Okay, got that. Mitesh, thanks very much. Well, with that, let's move on and find out what's hot on the commodity radar. We have Manisha with us in the studios now. Manisha, so tell us, what's captivating your imagination today?
Oh, the heat waves, as you mentioned out there. I am talking about monsoon because now this seems to be a bit bothering. You know, we let the first week go and the second week and the third week as well. So where we stand right now, the monsoon from 1st to 17th of June is 16% below normal. And we are looking at weaker numbers here as well. This is the state-wise area on how we've done. So South India actually has seen monsoon 17% above normal, and that can be seen in what the states are putting out. Tamil Nadu, Andhra Pradesh, Telangana have above normal rainfall happening, even Karnataka to that extent. But Kerala has been a concern. The monsoon onset was in Kerala, but as you can see, it is 46% below normal is what we are dealing with right now. And when you look at the other states here, Maharashtra is +6, but clearly it's not raining in Mumbai. It's pretty in Madhya Maharashtra is where the rains are there. And if you look at the other states like Gujarat, it is -71%. If you look at MP, it is -54% as well. Now, the thing to note is that Northern India is really having it bad right now. IMD has issued heat wave alert till 19 June for states like Haryana, UP, and even Delhi for that matter. You know, the last 8 days, it has been consecutive heat waves there. And the temperatures in Delhi for last 35 days has been above 40 degrees. So that is, and IMD tells us that this is normally, that doesn't happen. It always is with a bit of a break. But with 35 days above 40 degrees, there's a lot of heat accumulation is the reason the heat waves are just about continuing even as of now. Now, going forward, if you look at the major grain bowls, etc., that is Central India and Western India, we still are dealing with lesser rains here. So there is also an advisory coming out from IMD suggesting that there could be a delay in sowing with a delayed monsoon and a delay in harvest as well, a situation that we dealt with last year as well. But the good news clearly comes in for July and August, where US, Japan and the World Meteorological Department, everybody says that there is La Nina forming now for this year. That would mean wetter monsoons for India going forward for the month of July and August, and that looks quite positive.
Okay, thanks a lot for that. I think everyone's waiting for the monsoons, right?
A very unusual June for us here in Mumbai, right? Absolutely no sign of a cloud. It's just
there was one day when there was a little bit of okay, I hope that's not a norm. But thanks, Manisha, for giving us an update on the situation. Praying for the monsoons to come in thick and fast, right? But Upasana is joining in to talk about HAL and why she's watching that one this morning. Upasana, over to you.
Well, thanks so much for that. We can clearly see the stock soaring high in trade today as Defence Ministry issues RFPs for 156 light combat helicopters. Now, with the RFP issued, the negotiation trials will begin, and once finalized, a formal contract will be awarded post CCS clearance. Now, Phillip Capital says that it expects the company's CCS clearance by end of August 2024, and it has estimated a contract value of around 40,000 crores. It says that the delivery could start from Q4 FY25 with HAL's peak production capacity at 30 light combat helicopters per year.
Okay, thanks a lot for that, Upasana. Well, Vamakshi is with us to talk about BLS E-Services, J&K India, HOEC, HBL Power. You have your hands full. Vamakshi, over to you.
Well, absolutely, hands full indeed. But all of these counters are soaring in the trading session today. Let me first start off with BLS E-Services. They will be acquiring 55% controlling interest in RE Fidelis Solutions Private Limited. Now, keep in mind that this is one of the largest players in India for distribution and processing of loans. This deal is coming in at an enterprise value of 190 crores. This is an all-cash deal, and it is expected to be completed by the second quarter of FY25. J&K India is the next stock on our radar. They have received a mega order, and they've categorized this mega order as anywhere between 350 to 500 crores from Reliance Industries. This is for their gas cracker unit debottlenecking project at one of its division in Maharashtra. Bodes well for the company. The stock is soaring in trade today. Hindustan Oil Exploration is another counter that we will be watching out for. Positive development out here as well. In block B80, the export flow line is now cleaned up. Both the wells D1 as well as D2 are now lined up for production, and the current field production is about 1,300 barrels of oils per day and 6 MMS CFD of gas. Overall, B80 block was something that the street was watching out for, and as a result bodes well for HOEC. Lastly, let's also focus in on HBL Power. Reports suggest that Indian Railways is set to float a tender of almost 5,000 crores for the Kavach system. This bodes well for HBL Power Systems because it is one of the manufacturers of the Kavach system. So on the back of that, watch out for all of these counters.
Okay, thanks a lot for that, Vamakshi. Let's slip into a quick break, but look at the market. The Nifty is up 100 points, continues to scale new highs, as do the US indices. After the break, Lata will connect with our market master, Sridhar Sivaram of ENAM, on where he sees value in these surging markets. Stay tuned.
Welcome to our Market Masters edition, a special one. Well, the markets have been scoring new highs almost consecutively for the last week or so. And so have the US markets. So is there still value? And if there is, where? Sridhar Sivaram, the investment director at ENAM Holdings, joins us. Sridhar, good morning, and a heavy responsibility rests on your shoulders.
Thanks for inviting me, Lata.
Okay, well, first up, today we have got this Hindustan Aeronautics order. PSU banks, PSUs, let's keep banks away.
Yeah.
PSUs have really gone through the roof, although they're getting good orders.
Yes.
How confident are you that, with the return of the same government, this bet will work?
So if I go back, say 2-3 years back, we were very bullish on PSUs in general, including banks.
I should have said that in the intro, that we learned about PSUs from you. So where do you stand?
So they were deep value, say 3 years back, when we started looking at them. And it looked like your risk reward is extremely in your favor. Normally what happens in markets is when you have a sector or a segment which takes leadership, it doesn't fade away in 2-3 years. It goes on for at least 8-9 years. So there will be phases when there will be irrational exuberance in this segment. But I don't see, so if you ask me, do all the PSUs look very attractive right now? The answer is no. Risk reward, isn't looking great. But at the same time, I don't think this segment is going away in a hurry. The leadership will continue. And we'll see the government also supporting in terms of, new orders. And earnings will be strong. But valuations pricing in a lot more. That's how I'll put it. So I don't think the risk reward is looking great. But at the same time, I don't think this sector is fading away in a hurry.
Okay. Pricey, but it is still performing.
Yes.
Okay, can you identify pockets over there? For instance, would you go with power because there is such a screaming demand? Maybe there is excesses in defense and excesses in rail stocks, but power, even the ground situation looks...
Yeah. So power in general, we are very bullish, whether it is PSU or non-PSU. Just to put some numbers, that if you look at say solar, we're currently about 75 gigawatts. We're expected to triple the capacity in the next 5 years. Same is say with wind. We are at say about 40-45 gigawatts. We are expected to double in the next 5 years. Even thermal, we are underinvested. We are about 225 gigawatts. We are expected to add another 50 over the next 4 to 5 years. What we think is that the entire ecosystem will do well. T&D companies.
So even power generators?
So power generators, the suppliers of equipments, boilers, wires, you just name it. The entire ecosystem, when you go to add so much, the ecosystem will do well. Even utilities will do well. So utilities which have open access, who have not tied up on long-term PPA, they are selling at 8-9 rupees in the open access market. But that is a small percentage of their overall revenues. This entire ecosystem will do well. We're quite bullish on the power, utility, and the entire space there. And it's left to individuals to pick and choose, where they want to play.
But we think that what I mean is even PSU entities,
yes,
the
even
NTPCs,
the PSU entities
power
will
grid.
do well. You even see the financiers in that, PFC, REC. They have 4.5 lakh crore book now.
Yes.
So it is not a small company anymore. And they are guiding for 15-20% loan growth. We can question the business model, but the point is that they are also in a very sweet spot. So as I said, the entire ecosystem is looking very good right now. And it is left to individuals to pick and choose what they want. So we are quite bullish, and we have our own, biases there, but that's how we look at it.
Okay, now let me come to the first thing that you trained our eyes to. I think 2 years ago, you trained my eyes at least to the PSU banks.
Yes.
So finances in general, it's very obvious that an HDFC Bank or an ICICI Bank are still value. I think they're all still at, 2 times book, 2.5 book compared to his. But what about PSU banks?
Yeah. So PSU banks, if I go back, say, 3 years, if I look at my own portfolio, it was 60-40 in terms of PSUs versus the private sector bank. They outperformed so much that there's 80-20 now because the private sector banks did hardly anything. So if you ask me at this stage, the private sector banks are looking good because our play was that we thought that the credit cost will normalize. Credit cost was north of 2%, and they have started to inch down. You look at SBI last year.
I think 20 basis or something.
Yes, they were like, I think 15 or 20 basis points. The long-term average is around, say, 100 basis points, and they are at such a level that our view is that now it's very difficult for credit cost to go any further down. So it can only go up. So we still like a few PSU banks. It's not like we don't like PSU banks, but if I look at the basket now, the private sector banks look equally attractive. And PSU banks, which have higher credit cost, is where our bias is, because we think that the chance of the profitability there is higher. I just add one more point here, that if you look at PSU bank as an aggregate profit, say FY21, their profits were around 25,000 crores. And last year when we ended, it was about 1,40,000 crores. So the point is that the PSU banks have done well because they've actually delivered numbers, and stocks haven't done as well as their profits have. So actually they have in a way got derated. But from here on, it's very difficult to replicate that sort of profit growth. So there will be some normalization.
Okay. Well, since you said PSU banks, of course, they gave a dividend to the government, but bigger was the Reserve Bank dividend. So let me come to the budget and then go to specific stocks. Are you expecting that there will be some largesse by the government because of the election result, and also because they have more money? So does your investment strategy change? Everybody is talking about consumer goods now, FMCG and stuff.
No, our investment strategy is not changing. We think that the government gets about 1 lakh crore extra because of the RBI dividend. They may use that for some social schemes. They may increase allocation to Manrega or any of the other social schemes. They may try to boost with whatever they can. The other point to keep in mind is that the government can only do that much when it comes to capital expenditure. It's not easy to spend. They did almost 9.5-10 lakhs last year. They'll do 11.5 lakh crores this year. It's not easy. You cannot just say that I'll do 15 lakh crores. I mean, it's not even the absorptive capacity in that segment has to be understood, that these are long gestation. There are a lot of challenges to it. Absolutely. So even if the government wants, you cannot actually, even if you put that number there, you cannot actually execute it on the ground. So I think there's limitation on that. Government is doing whatever they can to boost investments. I think the private sectors will have to take some of the mantle now. We are reaching capacity utilizations from where you normally see private sector capex coming up. We are seeing early signs of that. So we think from a budget standpoint and an investment in the portfolio standpoint, we are not making any changes. We think the same will do. What was doing well earlier will continue to do.
Okay, so you're not into FMC. You wouldn't pick them up.
We do have some consumption stories in our portfolio, but we're not changing our allocation. We're not saying go and buy all the staple companies because the government may or may not do something to boost consumption. Those are really very marginal in terms of actual impact on the ground. We also think that inflation is very sticky. So it's not that, so one of the reasons for consumption, especially at the rural level, which is, stagnated or has been very low level, is also because
food
of
inflation.
Yeah, so it's inflation. And I don't think that is changing in a hurry.
Oh, yes. Food inflation is a problem. I mean, even now, it's the usual June phenomenon, but there is a huge vegetable inflation. But then we are told that it is a La Nina year and therefore the harvest should be better. Let's wait and see. Okay, instead of asking you leading questions, an open-ended question. Where are you seeing, the valuation of the market itself is not expensive. At 19x, it's actually probably at a discount to its long-term average. Therefore, there should be investment opportunities. Where are they?
So I think to a very large extent, I would say it is very bottom up right now, because in every segment or every sector we are seeing some excesses. But as I said, power is one segment, financials, especially in the large cap, which we've already discussed, we like pockets of pharma, manufacturing. Now, pharma also is manufacturing, but within the manufacturing, we also like, say, the EMS, auto ancillaries, some chemicals. So I think a lot of them are very stock specific, but I would say manufacturing is the other theme where India is really picking up in terms of it's no longer China plus one, there's also Europe plus one, because Europe also has their own set of issues. Some of the defense related changes that the government made in the previous 5 years is having a positive impact because of the compulsory manufacturing, 30% you have to manufacture in India. So those things are helping some of the companies. So on the whole, I think the entire manufacturing space is looking interesting, but the valuations are pricey. So that's a caveat.
There are drones and rockets in the private sector as well.
Yes.
So we have to, actually coming to that new gen companies, I'm not talking about rockets and drones, but even e-com. Today, Zomato was in the news. Do you think their overvaluation is over and now it's payback period? Do you like that e-commerce space?
So I think in pockets we like. So when they got listed in 21, we were not very happy because there was no path to profitability, and they were coming from a private space where they had tons of money chasing them, and the model was just growth. There was no path to profitability, and they soon realized that in a listed space, path to profitability is very important. So most of them have changed. Now, if you see the discussions that you have or the guidance that they give is all about when they'll be EBITDA positive, when they will be profitable on a PAT basis. I think that makes the whole thing interesting now. So we are invested in some of them.
You are invested, not looking for investments.
No, we already invested.
If you have to look for investments, where would you look? Additional money.
Lata, I don't think we are looking for anything specific which is like, this is what I want to invest. If we find something
you
exciting.
caught PSUs before. You caught Bank of Maharashtra before the market realized. So is there something, you can't talk stocks.
Power is the only one where I can say that, it's such a large theme that you have a lot of opportunity. Manufacturing is the other one. See, we also like pockets, like aviation is, travel and tourism and aviation is a great space. I mean, if you go to the airports, you know what's happening there.
Absolutely.
So I think anything related to that is
travel and tourism.
Telecom is something that we like because we know that the ARPUs haven't, kept pace with the value add that these companies are giving. So eventually, you know that the ARPUs will go up. So there are pockets and spaces where there is interesting opportunities to invest. But that's how you construct a portfolio, right? So you would have, companies.
You make the full thali.
Exactly. And that's how, so when some sector performs, the other doesn't. Eventually, as a portfolio, it does.
That is the final question I have for you. Like I said, the market as a whole is not that expensive. It's actually lower than the long-term averages. What is your sense about the market itself? We've been scaling new highs, which is legit. Every day, the Indian GDP is higher than what it was the day before. So it's legit that the market should go up. But are you getting a sense of frenzy?
I think there is. I mean, especially in the mid and small cap space, there is a frenzy. And I think it will be, at least my personal view is that this year may not be that great for the market. I mean, despite all the volatility and the hype that we've seen, markets are up possibly 6% for the year. Yes. So it's not like we've...
And the Nasdaq is up 18%.
Yes. So I think we will have a more reasonable year this year because one, the earnings growth, our own expectation for the current year is in the low teens earnings growth for this year. And the quality of the earnings may not be that great. It comes from segments where you don't actually give that higher valuation, especially say commodities. So we think that the markets could consolidate here. I don't see a massive correction unless there is something drastic in the US. So given the liquidity that the market possesses, so maybe 5-10% correction is par for course. We do see that correction happen on a regular basis. I don't see the markets correct too much, but it will not. I mean, I don't expect the markets.
Super returns of the last 2 years.
I mean, I don't expect, but markets always have a way to surprise, But that's how we are positioned, that we don't expect something, huge to happen. So every dip you try to add, so it's not like you do have some cash and you use that every dip. we got a dip 10 days back, so we were very active at that time.
Okay, that's good to hear. About 8%, I think, year to date on the Nifty, and you can't complain about
Yes,
an 8%
exactly.
in the first 6 months. We have more scope to grow. Thank you very much, Shivram, for giving us an encyclopedic view of the markets and to look for areas where you could be ahead of the curve. And Sridhar mentioned so many in terms of travel, tourism, power, manufacturing, which we can all look at. With that, it's a wrap on Bazaar. Chartbusters coming up next.